Welcome to the second event in the Value Chain series, this time on copper. I'm Boyd Davis, coordinator of this series and principal with Kingston Process Metallurgy. This event brings world-class experts together to give the investment community an unbiased understanding of the technical and market issues that are important for each metal, from geology all the way to recycling and everything in between. I'd like to thank Philip Mackey and Gerardo Alvear, who did the lion's share of the work putting the speakers together and coordinating this event, to Crux Investor, that's handled all the media and who has made this possible, and to MetSoc, that has championed this activity and is the home for the Value Chain series. And now I'll leave you with Philip Mackey, who will introduce the next 2 days of copper. Thanks.
Well, good morning, everyone. Good morning, all delegates, and hello to my coordinators of this series, Boyd Davis and Gerardo Alvear. So I'm going to be introducing the topic today, copper, and why it's a good investment. And then we'll have a team of experts that are going to thoroughly explore what copper's involved. Well, by introduction, copper right now, it's the strongest copper market in the last 10 years. Today, 4th of May, it was $442 a pound. That's about $9,700 per metric ton. And it's, as you can see on the right, it's the highest price certainly in the last 5 years. As I say, it's a very strong market coming forward. So, why copper? Copper is critical to powering a green energy world, which is a major topic today. In fact, a global energy transition is underway, and this is going to require large amounts of copper. This transition will in fact take many decades. It won't happen quickly. It'll take maybe over 50 years. Decarbonizing global electricity will be a first step, but in parallel, we'll see decarbonization of the metals industry. And also note that there are current disruptions due to the war in Ukraine, but that won't stop this transition. Another bit of info, keep in mind that 2/3 of global electricity is presently fossil fuel, mostly coal, and coal in many cases is being targeted to be phased out. Just a matter of interest on the photograph here, this is the Copper Mountain mine in BC. There's its share price as of a few days ago, but they're experimenting with electrical trolley assist for ore trucks. By the way, that kind of concept was first used in Palabora in South Africa about 50 years ago, so it's not new. So why copper? Good fundamentals, demand is strong, solid projects can weather the price swings, and copper investments will have good returns. A brief look at copper demand. The blue bars are copper production, and those dotted lines, there's a series of them representing growth. The growth ranges from 1.5 up to 2.2, depending on the scenario that we believe will be possible. There's a supply gap. This will be discussed later this morning and tomorrow. Just for info, by the way, Chile is large in copper. 30% of world mined copper is produced in Chile. Much of their concentrate is shipped outside Chile for smelting. Very interesting developments in USA, Canada, and Australia. A lot of new mines and projects under development. And I think we'll hear more about these and the junior mining companies involved in the coming days. China, big in metal production. You can see it produces over 50% of global metal. So why copper? Well, the energy transition and the decarbonization will require large amounts of copper. It'll take a long time. It'll take decades. And just for information, the largest metal industry, of course, worldwide is steel. It produces 7 to 8% of the world's CO2. And of course, it's a target for decarbonization. But we'll see that will take a long time. And this means that we expect to see strong copper demand also for a long time. In fact, this graph, just to illustrate, on the x-axis, on the horizontal axis, we've got years up to 2065. On the vertical axis is percent of world iron and steel by what we call low CO2 technology. Of course, very little steel now is low CO2, so it starts close to zero. There'll be a lot of test work, testing different new technologies, processes, options, including hydrogen for direct reduced iron. But you can see by 2050, which is a year a lot of people talk about for decarbonisation, it'll only be about 60 to 65% complete. So a long time, and copper will be strong for a long time. So with that introduction to copper itself, I'll turn the floor over to Bernard Respaut, who's going to talk about why it is time for investors to pay attention. Thank you very much.
So very good day, ladies and gentlemen, and very big thank you for the invitation to give you a perspective on copper as the electrifying metal of the 21st century. My name is Bernard Respaut. I'm the Chief Executive of the European Copper Institute, which is the European branch of the International Copper Association, the leading advocate of the copper industry. And within the International Copper Association, I'm also the global lead of the Clean Energy Transition Program. To start, positioning copper as this essential material for the clean energy transition, let me first start with this element that the transition to a carbon neutral economy today is a fact. Since the 2015 signing of the Paris Agreement, where we try and mitigate climate action below 2 degrees centigrade, what we've seen is a lot of initiatives which do confirm that this carbon neutral economy, this climate mitigation, is very high on the agenda. It's very high on the agenda of governments, because as you can see on the left-hand side of this slide, there is a lot of initiatives to determine national contributions. China has declared at the end of 2020 that it wants to be climate neutral by 2060. Europe, with the European Green Deal, is leading the charge there to really go into a climate neutral, carbon neutral continent. There are also initiatives in India, in Chile, also carbon neutrality by 2050. And the good news is that since February of 2021, the US is back into the Paris Agreement. But next to these nationally determined contributions, government action, we see a lot of private initiatives. For example, industry associations are pushing forward with plans, with roadmaps. We, as the copper industry, are currently working on the global copper decarbonization roadmap, which we plan to issue next September. We have seen the World Steel position paper on its contribution to a low carbon future. The cement and concrete industry has issued a roadmap towards climate neutrality in 2050, as did the aluminium industry, and the declaration of ICMM, the International Council for Metals and Mining, also on adapting to a changing climate. These are all good examples that industries, sectors are taking initiatives. But also, as has been surveyed by Eurasia Group in 2020, more than 600 global companies have committed to reducing their emissions consistent with the 2-degree objective of the Paris Agreement. So it's a fact we need to have this transition to a carbon neutral, climate neutral economy. How to get there? This is all about the clean energy transition. Because indeed, to move there, it's all about what energy do we use and how do we use energy. So there are two axes in this clean energy transition. First is this shift of the energy mix towards renewables, so non-fossil sources of energy. And the second axis is a better use of energy, an increase of the efficiency in these energy use. And these two axes play in three key areas. It's heating and cooling, it's power generation, and it's transport of goods and of passengers. So for the first axis about renewables, copper has quite an important role in these deployment of renewables. And these renewables are also copper intensive. if you look at this chart, which comes from the roadmap for the global energy sector by the International Energy Agency, you see that the replacement of fossil fuels is mainly accomplished through a significant increase of wind and solar technology. So these are the two leading technologies for getting to a net zero emission scenario. And both in windmills and in solar panels, you can see on the right-hand side that copper has quite an important role. For windmills, you need between 3 and 5 tons of copper per megawatt of installed capacity. 3 tons for onshore windmills and 5 tons for offshore wind farms. The same with solar panels. For each megawatt of solar panel, photovoltaic panel capacity, you need 3 tons of copper. So if you look at the increase of the energy generated by wind and solar multiplied by these intensity factors I've just described, we speak about quite significant amounts of copper to deploy these capacities. Second, it's also about transport, as I said before, and there we see that battery electric vehicles are the driving force to have this shift to fossil-free transport. And you can see on the left-hand side from a study by ID Tech that a normal car, which is on the bottom, the internal combustion engine ICE car, typically uses 23 kilograms of copper. A battery electric vehicle, so a fully battery-driven vehicle, uses 83 kilograms of copper on average. In between, you have the hybrid cars, plug-in hybrids, which also need more copper because you need about 40 kilograms per vehicle. And this copper goes into the electric motors, into the drivetrain. They also go as a foil into the batteries, and they also go into the cabling, the harnesses, the power cables that are required to move the energy across the car. On top of the copper for the vehicles, you need copper for the charging infrastructure, the loading stations, be it at home or be it also on the road. Third element, copper is also crucial to increase energy efficiency, the second axis of the energy transition, higher energy efficiency. And I have here 2 examples that show that copper is a key contributor to achieve this increased efficiency. First, in motors and transformers, you see here on the graph that the copper content, be it for a 1.1 kilowatt motor size or a bigger motor like 110 kilowatt, you see that in all these size of motors, if you want to go from a IE1 efficiency level, which is the lowest existing on the market, to a IE2 or even better to a IE3, you see that you do need to increase the content of copper in the motor. For the small motor, we go from 1.5 to 2.8. It's close to doubling the quantity of copper to get to a higher efficiency rate of these motors. The second example is in buildings. Buildings are also quite big energy user, and they also need to increase their efficiency. And for this, there are several technologies you see illustrated on the right-hand side of the chart. For example, going to photovoltaic panels installed on the roof or in the garden, or also a solar thermal collector for the heating of sanitary water. These are the renewable part of what is happening in buildings, but there is also an efficiency part, which you can see with what we call BACS, Building Automation and Control Systems. So the building automation and control systems in the houses is what enables houses to be smart. It's a system of sensors and driving motors that allow to optimize the consumption of energy in the house, using night tariffs or using the energy stored during the day to use it again during the night, or to, for example, shade your windows during a lot of sun outside to avoid to use too much air conditioning power. These building automation and control systems required copper for the remote controls linked to the systems, but also to link the sensors and also to drive the motors that do operate the parts of the energy systems that need steering to achieve again these energy efficiency. Another interesting example is what we call the wastewater heat recovery, which is a system that exchanges through copper tubes, exchanges the heat that you still have in the water of your shower while you're taking your shower, and that water that goes away through the basin, to take the heat which is still there to preheat the water coming into your shower. That uses 4 kilograms of copper, but it does indeed represent quite an interesting energy saving in a house. So when we put all these elements together, what we see is that there is a quite substantial amount of additional copper needed to realize this clean energy transition. It basically means that we will go from today around 25 million tons of copper use worldwide to 50 plus, depending on which scenario you take. But if you take the 2-degree scenario, that's 50 million tons. So it's doubling of copper demand by 2050. If we go to the 1.5-degree scenario, it's even higher. It goes to around 57 million tons of copper use annually. Where are the drivers? Well, definitely electrical equipment, where we see, of course, a big demand in China, and that will continue growing out because of the grid built out in this country, but also the development of renewables, as I said before, and of course the connection of these renewables to grids. So there is a grid expansion needed, and we expect this also to go to lower income countries. And we also expect that there is going to be an increase in the quality of grids through smart grids to allow the integration of renewable sources that will also require additional systems that are copper intensive. Construction buildings, as we spoke, that can use a lot of copper, and the urbanization of China, which is still going on at high speed, will contribute till 2030. And we expect also after 2030 that the continued growth of the middle class will also be a driver for better houses with better equipment, which are also copper related. In the industrial and equipment sector, again, this capacity to support decarbonization of the industry, of society, will definitely require more equipment. Is it battery-driven trucks into the mining industry? Is it also electrification of some industrial processes to decarbonize, to reduce their impact, their carbon footprint in the atmosphere? Transport, electric vehicles, big driver already now. We see a quite significant increase in the production of electric vehicles and the intake of these vehicles by consumers. And linked to that, of course, the charging infrastructure expansion. We expect a price decline of electric vehicles after 2030, which will facilitate the intake in lower income countries and also, of course, further infrastructure development. Where you expect also after 2030 commercial vehicles to be the key driver for electric vehicles. And finally, consumer demand. Again, this growing middle class, this growth of global wealth will definitely lead to an additional demand for consumer goods. Is it air conditioning? Is it heat pumps for houses? And this will definitely also contribute to the growth for the demand of copper up to 2050. We do see, as you see on the overall increased rates, we see a deceleration of this growth movement starting from 2040, because we do believe that the bulk of the infrastructure development, especially linked to decarbonization, will happen in the 30s, still happening now in the 20s, but also in the 30s. After 2040, we will see some decrease, but we are still speaking about a demand increase of 1.5% per annum. So this concludes my presentation, which definitely underlines that this crucial character of copper in enabling the transition to a climate neutral economy means quite a substantial amount of additional copper needed to be put on the market. And it does show that copper as a metal still has some bright future ahead, and this even after having been around more than 7,000 years. Thank you very much for your attention.
Hello, my name is Nick Pickens. I'm a research director at Wood Mackenzie, and I'd like to thank the CAEng for inviting me to present on the near, medium and long-term supply outlook for copper. First, please just note this disclaimer relating to the presentation. Now, I don't want to be too specific as to the exact period of short, medium and long term, but what I would say is that there's a clear and widening divergence between what we're expecting certainly over the next couple of years and then beyond with regard to the requirement for new mine supply, given where we see the demand outlook. But we do appear to be approaching another growth phase in mine supply. The chart on the left-hand side is showing copper and concentrate and SXEW production. And you can see that we've just come through a period of the last 3 or 4 years of really relatively little growth, pretty flat, around about 1% per annum, if that. That does belie some interesting trends. Certainly we've seen declines in some traditional mining countries, Canada and Australia, for example, whilst we've seen some growth in other countries, such as the DRC. But looking ahead, a combination of new projects, expansions, and a recovery of baseline supply will start to see us approaching growth of around about 3.5–4% a year until 2024, and much of that growth really coming from copper and concentrate rather than SXEW. And that will be the fastest pace of growth we've seen really since that period between 2012 and 2016, when prices were in quite a steady decline. So where's this new production coming from? Well, we can see from the map on the right-hand side there that the lion's share of additional supply is really from countries and regions that already have significant production capability. Chile, Peru, and the African copper belt in particular. There's a few significant projects worth mentioning that are labelled here on the slide. In the Americas, we have Quebrada Blanca Phase 2 in Chile, that will start contributing from the fourth quarter of this year. That's around about 250,000 tonnes a year. In Peru, Quellaveco, Anglo's project will start, well, it's slated to start in the next couple of months. And then over in the copper belt, we've got Kamoa-Kakula, which has already started. It's now embarking on a second stage, and it could produce 350,000 tonnes this year, which is pretty impressive given that it was effectively producing nothing at the start of 2021. We also have a couple of new projects in China, which are relatively small, and in addition to those, we've got higher production from projects that were really ramping up from starts over the last couple of years. So particularly Grasberg, for example, and the Spence sulfide project that are still adding new incremental supply. And then one final thing to mention on this slide, which really leads us into where we see risk related to production, is that you can see there is a project in Russia in the form of Udikan, expected to come into development this year. Really very unclear as to whether this is on track or not. But there are headwinds in terms of bringing current supply, new projects online, and that has really been quite apparent looking at some of the production reports in the early part of this year. And we've seen in the mainstream media talk of supply chain disruption, logistics, and bottlenecks, and it is still prevalent. And it's what's been really driving the market over the last couple of years, and we do think it's going to continue to be a key factor in the market, certainly in the near term. And that's not just because if you stop mine supply, that has an obvious impact on the supply-demand balance and fundamentals, but also supply chain dislocations mean that stocks required to cover consumption have started to increase, and really have increased dramatically. Mines still face bottlenecks in production and transport to port. The shipping and freight is taking longer and costing more, and consumers are holding more stock to secure supply. And all of that contributes to a sense of greater market tightness. Specifically, if we just look at this map, from a mine production perspective, we've seen really disappointing results from Peru and Chile. We've had mine blockades in Peru, concerns of further problems ahead. In Chile, we've seen slower ramp up of projects, trucking strikes, absenteeism due to COVID, particularly at the start of the year. And then in the Copper Belt, we're hearing of logistics issues with difficulties getting hold of trucks and infrastructure, really approaching difficult times. And then aside from the sort of main producers of supply, obviously the Russia-Ukraine situation has caused problems, not because of mine production or smelters and refineries, not in the same way we've seen in nickel and aluminium, but certainly a headache for shipments going into the Black Sea region, where there are some European smelters, for example. And in China, of course, we're seeing COVID restrictions that are happening now, impacting really both on supply and on demand. And it's difficult to see this situation unwinding anytime, this year, and potentially we could see supply issues into next as well, all providing headwinds to that theoretical growth in mine supply that we're seeing. So let's think a little bit further ahead. And you may have noticed from the first slide, we showed mine supply, that by 2024-25, our base case supply forecast begins to peak out. And so then we start to get grade decline, we get reserve attrition. And then to meet our future demand forecast, which we think will continue to grow, that means medium-term supply has to be met from projects that have yet to be sanctioned and committed to. And based on that demand forecast, the requirement for new projects beyond sort of on a 10-year time frame sits, and the difference between base case really sits at around about 7 million tons over the next decade. And if you look at our historical analysis, it's actually not too different from a decade ago. However, what is different is the lack of advanced stage projects. And that's what we're showing here in the dark blue. Now, we categorize projects as either possible or probable, with probable being the most advanced. And you can see that if we take allowance for those advanced projects and assume they're converted, now we still have around about 5 million ton supply gap that needs to be filled from possible projects. And that's really very different from the previous cycle. And ultimately that's causing the issue on a medium and long term time frame. What are the reasons for that? Well, some of the answers can be gleaned from the chart on the right hand side. We're showing the price correlation between the level of price and the level of project approvals and sanctioning. And what really the story begins 20 odd years ago with the start of the sort of China boom. We saw a lot of capital flowing into the market, investment in exploration and development, and really the project pipeline being filled. And then when prices really picked out and there was the appetite in the mining industry, that we saw projects being sanctioned at a rate of about 1.5 million tons a year. Obviously, the prices fell off. There were no projects being sanctioned and no capital being spent as it was getting preserved. And then when prices picked up again, there really wasn't that many projects left in the pipeline to bring on. Say, we have QB2 and Quellaveco. And since that little pickup in 2018, we've still got higher prices, but really we're not seeing the same rate of project sanctioning because we just don't have the advanced stage projects in order to do that. So one issue is effectively the quantity of advanced stage projects, but there are other barriers as well. From a financing or sort of cash position perspective, you could infer that there shouldn't be a problem. I mean, this chart on the left is showing free cash flow for the copper mining industry, and you can see it's really very strong at the moment because of high prices. The industry making about $100 billion, we think. But the issue is that the mining industry doesn't have to invest in new projects if they don't see the quality or the return there. It can be returned to shareholders. It can go into other sectors or into other commodities. So we've got this lack of advanced stage projects and lack of quality projects. And despite the high cash flow, there's not necessarily a will or desire to put the capital into what's considered to be lower quality. There's another issue as well, is around risk, really. ESG risk, financial risk. Put simply, it's getting harder to invest in the countries where the resources sit. And if you look down a list of countries where our advanced stage projects sit, it's kind of easy to see why. I mean, Russia's there at the top. We've got quite advanced stage projects like Aksug, Bamskaya, Malmys, that are all going to find it challenging to get capital goods and investment to be tipped over into a base case project. It's not just Russia. The US has got issues with permitting, or we've seen blockages in terms of project permitting. And clearly, elsewhere in the Americas, Peru and Chile things are uncertain in these countries. Certainly, Chile, there's uncertainty around the fiscal royalty regime and concerns around the relationship between mining and government, and similar in Peru as well. The Congo has been something of a success story. We have Chinese investment there, but still, I've already mentioned some of the issues around infrastructure that can be a hurdle or a barrier to entry. So there's certainly headwinds in terms of bringing on these new projects over the medium and long term. So let's think even further out, and obviously our certainty or level of ability to predict becomes very much more challenging. But one thing I think we can already start to see is the way that the world is evolving, and we can see how things that are happening now will impact on the way that copper is supplied and consumed in the decades to come. And certainly the drive to a more sustainable way of mining and the green agenda is going to be integral in shaping future supply. Now, it's hard to speak about future supply without thinking about the requirements for copper and future demand. I don't want to dwell too much on this. Obviously, Carlos is going to be talking on this shortly, but what I would say is that we do believe there's clearly strong growth for copper demand, around about 60 million tonnes worth of additional demand growth over the next 20 years. Much of that is in the electrical network, in transport, and of that, green consumption, so particularly in EVs and in power generation or renewable power generation in wind and solar are going to be a big contribution. And also the fact that the world, as it develops and grows, consumes more power and electricity, and the intensity of use will increase as that happens. So it's all positive for copper, and that underpins this requirement for supply longer term. I think one sort of highlight for copper, I've gone through a lot of the challenges, and perhaps it seems a little bit bleak in terms of how we can deliver on primary metal supply, but there's a lot going for it for copper supply from a primary perspective as well, in that it's a relatively green form of or metal in terms of carbon emissions, and certainly compared to some of its competitors, and aluminium that can be substituted on our numbers for scope 1, scope 2 is 3 to 4 times more carbon intensive than copper production to finish metal. And also, if you look at the map on the right hand side, the new projects that we see down the line are all going to be in areas where power generation is renewable, and certainly hydropower in Africa and in Chile, most new power generation capacity has to be renewable. So there are positives in terms of the green profile and credentials of copper production going forward. I think one thing we believe is that the future copper demand, given its strength and where we see growth, it can't just be met by mine supply and primary production. Scrap and secondary is going to play an ever increasing part in that story. And we were actually thinking or forecasting, that over the next 20 years, total consumption from direct use of scrap will grow quite a bit more than from a refined metal. Of that 16 million tons or so of total consumption increase that I was talking about 6 million tons we think will be from scrap, although we're changing those numbers on an ongoing basis as the market develops. But what's quite interesting also is that scrap supply is so much more elastic than the mine supply, and that's really clear from looking at the numbers in 2021 versus 2020. We saw scrap traded volumes up about 18% or close to 20% on a contained basis year on year. And given that traded supply is only about 40% of the market, if we gross that up, we basically get to about 2 million tons of additional copper from scrap year on year. And if you think about that happening in the market, well, it's just impossible to happen from primary supply over such a short time frame. So there is that price elasticity related to scrap. And we're seeing the direction of travel is clear also from looking at the amount of investment going into new capability and capacity in scrap processing. And all around the sort of developed world, if you look at the US, we're seeing e-scrap fed facilities being announced in Georgia and South Carolina, scrap fed electro-refined and anode production and direct use facilities. And we're seeing a similar direction in Europe. Producers there have been very vocal at targeting more cathode production from scrap. So it doesn't have to be from mine supply. Scrap will certainly play its part in future supply for copper. And that brings us to brings the presentation to a close on the supply side. We're going to talk about the outlook on demand shortly, but really, in summary, in the near term, we are seeing mine supply growth. The story changes over the medium term. There does become a requirement for mine supply post 2025, and there are ever increasing headwinds in order to bring that supply online. And as a consequence, that will have to be delivered, or the requirement for mines for copper will have to be delivered from both new projects, but also from the secondary market. And I think at this point, it's to hand back to the CAEng, and we can talk through the demand outlook and then ultimately questions. Thank you very much for listening.
Good day, everyone. This is a presentation from the International Copper Study Group about the demand side of the global copper value chain with the latest information and perspectives. First of all, what we call the demand side is the industrial demand side. Basically, it's the fabricators using copper and copper alloy products, and basically they face a supply side that is composed by the copper that is mined, refined, and also is coming from copper concentrates that are smelted and refined. This is almost 21 million tons currently. And then we have the scrap. The scrap is coming from scrap that is going to smelters and refineries, around 3.5 million tons. And a very volatile but very important part that is a scrap that is directly melted by the fabricators. This is a demand factor that is usually not mentioned very often, but is very important and has been very volatile in recent years, from around 5 million tons in 2020 to around 7 million tons in 2021. So this is what the industrial demand side is facing in terms of supply. Yeah? To understand the demand for copper, we need to take a look what's going on with the global value chain. On the left, we have mines, smelters, and refineries, and what we usually call copper demand is the demand for refined copper. But there is more than that. There is scrap that is directly melted, and the fabricators are processing refined and scrap. Basically, we have plenty of wire rod plants, brass mill plants, foundries, and other plants. And then we have another demand, that is the demand for the manufacturers that demand intermediate products or fabricated products. And then we have different sectors like constructions, industrial equipment, electric and electronic equipment, transport, consumer products, manufacturers, consumer products, and other uses. Then we have a new demand, that is the demand for these manufactured products that they contain some copper, yeah. And then we have the use of copper, yeah, that is in a big reservoir. And then we have the end-of-life products that they basically go to be managed, yeah, by the construction sector, but the industrial sector, but we also have the all vehicles, electric electronic waste, and all this is in part disposed, in part dissipated, and in part goes back as all scrap that together with the new scrap that is coming from manufacture is recycled to be used again by smelters or by fabricators. So in the same story, in a more easy graphic, is to look that part is coming from the global mining, yeah. Another part is from low-grade copper scrap that is smelted and refined. This refine is basically joined by another flow of scrap that is direct melted in green. And then we have the production of intermediate or semi-finished products that is between 29 and 30 million tons. So part of this semis goes recycled as a scrap from fabrication, and the rest goes to end use. And then we have the recycled flow. So we're talking about 24 million tons of refined copper and between 5 and 7 million tons of copper recycled by manufacturers. In recent years, this total demand for copper, yeah, has been growing from 24 million tons in 2010 to almost 30 million tons, 29, 30 million tons in recent years. If we look at the refined copper use and the scrap directly melt, yeah. So if we look at the industrial use of copper and of refined copper, and we add the scrap directly melt, we have an idea of the industrial use of copper in fabrication by every region, where we have some big users: China, Europe, North and South America, the rest of Europe, the Middle East, ASEAN, India, Japan, and the Korean Republic, where most of the copper is used, basically refined industrial use and scrap directly melted. Not all we don't have that the global demand is exactly to the similar to the scrap use. We have some differences because of the methodology to calculate refined copper demand. Sometimes is based on the production of refined copper, net of trade and net of stocks. So in some cases, for example, in 2020, we see that the demand was higher than the industrial use. Yeah, and the difference was mainly imports of refined copper going to China. So we need to be very careful when we calculate the industrial use and demand. In 2021, we have the opposite situation with a big contraction in the Chinese imports, around 1 million tons less of refined after historic peaks in imports in 2020. But we have more imports going to countries recovering after 2020, as the US, Italy, Malaysia, Korea. Yeah, so we need to be very careful on this. And also the role of scrap is very important in demand. For example, last year we have a historic recovery in the imports of high-grade scrap in China, almost 1.7 million tons that were used to produce copper wire rod products. So the scrap directly melt plays a role. So if we want to have a good idea about what is the real growth in industrial use, we can see our statistics on fabrication output reported. Not always reported, but we have a big sample, and in this big sample we see that the industrial use of copper increased 5.2% in 2021 versus 2019. So this gives us an idea of what is real industrial use, instead of demand. Then what is the capacity to use copper is basically the semi-fabrication capacity that is very strong in some countries like China, US, Japan, and India. So this gives us an idea of the total capacity to use refined copper and scrap. And this capacity has been increasing significantly in recent years, mainly in copper wire rod, but also in copper foil that is essential for electric vehicles. So we have a very strong growth in the global capacity to use copper, even we don't have enough copper to feed all these plants. Yeah? So the fabrication capacity in China has been growing at historic records, and also we have around 3 million tons more of new fabrication capacity in recent years outside China. In relation to the current years and the perspectives, we see more new plants that they can use copper, refine and scrap outside China, in the case of copper wire rod, and also in the case of foil and some tubes plants. So we see that the capacity to use copper keep growing not only in China. If we look at the capacity in China and the rest of the world, it's clear that China has a massive overcapacity of copper wire rod, copper foil, and tubes, compared with the rest of the world. If we look at the production, not at the capacity, we see the important role of China using more copper to produce tubes, flat roll products, and copper alloy wire compared with the rest of the world. So we see the importance of China in the fabrication of some specific copper products. The most important is copper wire rod, where we see a quite balanced situation between what is being produced in China and the rest of the world. If we look at the intensity of use, how much copper is used per unit of GDP, compared with the GDP per capita, it gives a good perception about how the demand has been changing. We clearly can see that but because of the globalization process, the use of copper, the intensity of use of copper is moving to countries with large populations and a lower GDP per capita compared with the past. The trend is quite clear about the intensity of the copper use per unit of GDP. Well, one step is the demand of refined copper and scrap by the fabricators, and this is clear that copper wire is 63% of the all demand, with copper tube only 12%, foil growing but just 3%, flat roll products around 12%, and rod bars and sections 10%. So all these semi-fabricated products are used in different end-use sectors. The most important is industrial equipment with 32%, the construction industry with 28% worldwide, infrastructure around 16%, and transport and industrial uses 12% each. This is the comparison between the intermediate use of copper and the end use of copper by sector. If we look at the end use of copper by the sector, is the rate of growth is in recent years is very, very clear. How the fabricated products are being used mainly by power utilities, transmission and distribution networks, but the more intense electric applications in the construction of automobiles, and also with a lot more computers and industrial electronic equipment. This is the main drivers of global copper end use in the last decade. If we look at the latest data available about copper end use, we see that beside the power distribution and transmission network, we have ammunition as a very important sector, also coins together, but the world is not using a lot more coins. And then we see how the distribution of different end-use products was according to the latest data that 2020, that was not the best year for industrial use of copper, but 2021 was stronger. So there is quite a detailed summary about the main trends on the demand and on the industrial use of copper. Finally, it's important to compare how stable is the relation between the refined copper and in terms of grams of gold. Copper in terms of gold has been very stable. They move together most of the time between 1974 and 2022, or less than 200 grams of gold per ton of refined copper. But when the global trade is restricted, the situation can be very different, and 1 ton of refined copper can cost up to 1 kilogram of gold. Finally, the conclusions. The global demand for refined copper is not enough to understand the industrial use. The methodologies to calculate the copper demand can be leading. It's very important to look at the real fabrication. Finally, we see the role of scrap. One thing is scrap refined, that is supply side, and scrap direct melt can be understood like demand side. Yeah, these flows tend to change very fast, especially scrap direct melt when refined prices change, like last year, for example. We see that the role of international trade of scrap is a buffer in the global, adjusting the global demand and supply balance. Yeah, we see how the global fabrication capacity keep growing. We also, when we look at the end use of copper, we see different sectors moving at different speeds, affecting the demand for refined copper and scrap. And well, before 2020, the main uses of copper were driven by electrical utilities, by transport and electronic, and now international trade is a factor of scarcity. Thank you very much.
Well, greeting friends, and thank you for inviting me to give a brief presentation on, I guess the theme they were looking for, the organizers at MetSoc, was how to invest in copper. And of course, anyone would recognize it's all the many publicly listed copper companies, juniors, developers, and what have you, and of course, the various instruments through physical copper. But for the most part, it's buying shares in publicly listed copper companies. So brief presentation, haven't done a lot of these since the last couple of years, like most people, and I've even stopped doing these virtual presentations, but I think this is a very important one. So I was very happy to participate in this event. I followed energy for the better part of now 25 years. It's a front page story. I think everyone can, understand or look at this path to electrification and the role that all these things that enable electrification, namely copper, is going to impact that or be impacted by that. And so I look at this 25 years of experience and how this has evolved, and it has changed a few times. And now with this, they've put in pause this green movement, it would seem, because everyone's panicking about energy supplies because of the conflict between Russia and Ukraine. But the trend is definitely going towards this, for many reasons, into electrification. And it's amazing the level of, what's the polite word in English? Ignorance on what enables all of these things. They really don't have this long-term vision. And we've seen this now with all the prognostication and forecasting on how many electric vehicles all these companies are going to build and all the batteries, but they don't have the critical metals or materials to do it. So what will happen? Very quickly, copper became an important commodity, and we saw this as it continued this long-term decoupling from oil. If you look at a chart over 30 or 40 years, this is becoming very pronounced. Copper now is at $4.5 a pound, and if oil had kept up with it on that long-term trend, we would need to see oil around $150 a barrel. So it's about 95, 100. We'll see. I believe copper is going to be much higher than here, and it's based on engineering, not on any other speculations. And so are we going to see $250 or $300 oil in the future? The oil market is going to continue to be important for the rest of our lives, but it is going to be driven by politics, not fundamentals. And this is why we have this big ramp up in price for oil. But this is simply going to accelerate the way countries like Japan and Australia and all these other countries that don't have big oil reserves, what are they going to do over the next 5, 10, 15 years? It accelerates this pivot. And of course, this graphic shows very, very clearly in a very simple way how the importance of copper going forward. This is a quote that my friend Dennis Gartman always uses, and it really is the number one rule in commodity speculation. It really, running out of a commodity doesn't matter until it matters. Then it matters a lot. We should all recognize that we are effectively run out of global warehouse supplies of copper, where oil reserves, strategic reserves, countries have 200 days or 150 days. When we're talking about copper, the industry, the fabricators around the world, we've got about 5 to 10 days sitting in global warehouses. So if you look at the spot price, this is 1 year copper. It's come off pretty hard the last few days here at the end of April. But if we look at it on a longer term basis, happened very quickly, where copper was trading at $2 a pound and it went to $5 a pound in the span of about 1 year. What's changed? Nothing. There's simply, I would say, the speculators have driven the price more to a normal level. So what's going to derail this? There's some master themes that have to be looked at. Of course, there's the one that's always there, that's substitution. The world is electrified not only with copper, but it's also done with aluminum. So the question would be, can aluminum really be a big substitute? If the price of copper is too high, is this going to take away demand from copper? At the margin, a little bit in some applications, but as you can see here in this graphic, there are a few things that certainly can be done with aluminum and or copper, but look at the aluminum price. That 3.5 or 4-to-1 ratio price-wise between copper and aluminum. When aluminum also increases in price, it removes the financial incentive. And there's also simply for application purposes, it cannot be substituted because we're increasingly looking at the integration of alternating current with direct current. And which means high amperage, and high amperage means thick cables, and thick cables can only be done in copper. You cannot substitute aluminum for many of these applications. But as Richard Atkinson, the CEO of Freeport-McMoRan, has consistently said in the media, we simply don't have the amount of copper that we're going to require to electrify the world like they are forecasting to do. We are going to have copper, but we're not going to have the copper for that. It's going to be done with aluminum and copper. So both of them are going to win. And I don't think that's going to be something that derails this thesis on investing in copper. You can argue what the CAGR growth rate of copper is going to be. It's going to be between 3 and 5% as we really get into the big growth phase of this pivot to electrification. Bottom line is it's going to be a great business, and it's going to trickle down to the miners because people that create things to generate, transfer, or utilize electrical energy, they are going to be boom years, really for the rest of this decade and going into the 2030s, which is going to transfer into very strong demand for copper. And the next part for really macro investors, generalists, people that don't really care about mining, they'll do it as a themic trade. Now is that time. There is heightened interest from generalist investors. But when they're analysts, and you could just picture in the theater of your mind, some junior person, they say the head of a big fund and says, you know what, go do some work on this. Let's go see where the opportunity is in this, the enablers of electrification, copper going to be one of them. They're going to come back and say, you know what, the world's oil supply comes from millions of different individual wells and thousands of different companies. The world's copper supply comes really from around 20 companies. And if you look at the overall supply, around 20 large copper mines is what gives the world about 45-50% of copper production. This is not very well understood by many generalist investors. They just don't care. We know that over the last 40 and 50 years, people are hyper aware that a lot of oil comes from the Middle East, about 20% of supply. But if you were to tell them that 40% of primary copper comes from Chile and Peru, people really don't believe you. They say, oh, no, you're wrong. Then you look at it and you explain to them, no, here are the 20 or 25 largest copper mines, and what's the common theme? These are individual operations, and this had some future forecasting because the project in Robert Friedland's project in the Congo is going to become the second largest producer of copper in the world. And there are these 14 or 15 largest companies, and where are their reserves? Predominantly in Chile and Peru. Where has the growth come over the last 20 years? In Chile and Peru. The takeaway here is two of them. One, very few companies produce the world's copper. So you don't have to talk to a lot of people to know what the future is going to look like. And I think Richard Atkinson and before Ivan Glasenberg they were doing a very good job trying to share with people and trying to enlighten them that it's not going to be so easy. And the second one, the big elephant in the room, is grade, falling grade. Unlike the oil and gas industry that has reinvented the wheel, both the way they look for oil and the way they've been able to extract more and more oil from tighter and tighter formations, very deep offshore, and that's why we now have 100 million barrels of production potential, even though countries like Venezuela, Iran, and they're not even really producing. Libya, they're not even producing the way they could. Copper, there has been no such reinventing of the wheel. The fact is, grades are falling and falling and falling. And if you look at the future reserve profile, now we understand that. For us, this is like reading a Harlequin romance novel, that we live it every day. They don't appreciate this. You need to articulate to them and say, look, imagine that you are operating a large copper mine in Chile, and those 400-ton trucks, that ore, because the grade, when it falls from 0.6% copper to 0.4% copper, if we were mining over the course of a year in these very large mining trucks, let's say we were mining 20 million tons of rock, but the grade falls from 0.6 to 0.4. We, as an operation, now have to mine 27 or 28 million tons for the same yield. This is very expensive. This is why the costs have continued to increase. This is why, even though there's been a lot of investment in Chile and Peru, the yields are roughly the same. Maybe not Peru, but I'm talking more about Chile. It's been that static 5.5 million tons a year of production because of all the other situations. So if we understand, during the China super cycle, the largest mining companies in the world invested about $600 billion in these 5 important enablers of electrification, of course, led by aluminum and copper, and then what was smaller industries, of course, cobalt and lithium. So if you forecast where we're going, and never mind the prognostications of what everyone is telling the world what we're going to do and how many batteries we're going to build and the greener and cleaner energy, we roughly, as an industry, have to invest about 300% more than they collectively did during the China super cycle 2005 to 2019. This is a breathtaking figure. Does this even factor in the value of the US dollar? Of course, $600 billion in 2005 is not the same as it is today with all the money that's been printed in this world, which is where you're going to have this headline figure, the inflation adjusted price of copper. You have to look back, what was the value of that 15 years ago? Because it's different. Just because copper is trading at $4.50 a pound today, what's that like of yesteryear's dollar? It's like $3 copper from back in those days. So Warren Buffett loves to have a moat. There is no better moat for a business because the copper mining industry is ruinously expensive. It's geographically very scarce, and it's getting more and more difficult to get to the finish line with all those different parameters. It takes more than 20 years from discovery hole to production. So it actually is a very good business, and we'll see if people like Warren Buffett actually take liking to that. Is recycled copper going to save the day for investors? No. When the price of copper went high for the first time, today 17% of our supply comes from recycled copper. It has always been an important input for fabricators around the world. When the price of copper went high for the first time, talking about 2010, 2011, when it was over $4 a pound for quite some time, of course, there's more recycled copper. People were stealing it, as everyone knows. And it was about 23, 24% of the market when the market was 15 million tons. So can it go back to 24, 25%? Going to be hard. Our base is much higher. So no, it doesn't save the day. A lot of people think that recycled copper is going to be something because it's infinitely recyclable. We've been reusing copper since the days of Julius Caesar, but it's not going to save the day. But it could get up to about 21, 22%. And then there's innovation. Like the oil and gas industry, is this a place to invest? And can we see a dramatic increase of efficiency from the existing operations? Not really. We already recover more than 90% of the copper out of rocks. We're talking about millimetrical progress on ore sorting and more efficient trucks and all those other little ancillary sort of helpers or inputs to the copper mining process. But can you get 5 to 10% efficiency out of an operation? That's what we're looking for. But unfortunately, that's going to offset itself within almost every major operation falling grade. So if you increase the efficiency by 5 to 10%, but if your grade goes from 0.6 to 0.5, it negates that. So that too is not going to be a driver. Innovation is not going to be able to save the day. It's going to, the future is going to come from future development. And that common theme happens once again. What you're looking at here there's about 20 projects currently being built, and you should be very well aware of these. It's going to result in just over 3 million tons of new production. And this goes until, as you can see, till about 2027. Common theme, Peru, Chile, some countries that don't have a long standing history of copper mining culture, so there's going to be some teething and growing pains there. But the headline here, it now takes, for each 100,000 tons of future production, it's about 2 billion capex per 100,000 tons. It's not like it used to be. And if we look out even further, going to 2025 into the mid-2030s, that number is going to go to about 2.5 billion per 100,000 tons of production before cost inflation. And yet again, Peru, Chile, places of higher elevation are places that do not have a long-standing culture of copper mining. So it's going to be constrained. And the future will happen not only with copper, it's going to happen with aluminum. People are going to be looking at these juniors, and that's where I believe the disproportionate gain is going to come by investing in top-tier, well-situated, established copper development projects, because it takes 1 to 20 years from a discovery hole to production. So what we did formerly at Copper Bank, which is now Faraday Copper, run by Paul Harbidge and Russell Ball, my management of Faraday Copper, we focused on projects in Arizona and Nevada. And if people would look at the progress that's taken place at Copper Creek, Paul Harbidge and the team are going to be moving that project forward aggressively through the balance of 2022. Just raised $20 million with marquee investors. People can look at that in the press release. And we believe that it's opportunities like that that give you a disproportionate benefit. Where if you look at any major mining company, ABC Copper Mining Corp, can they double now or go up maybe 3x from where we are now in the fallback? Yeah, I think that's what you're looking at. But if you pick a good junior, there's the potential for a 10 or 20 bagger still. And we believe, or at least I believe, that if you look at a company like Faraday Copper that's got a market cap of around 100 million Canadian, so 80 million US dollars, there's the opportunity. But what am I showing you here? I'm showing you volumes on the Toronto Stock Exchange Venture. This is the junior exchange. The most listed copper juniors are on this particular exchange. Look at the volume, the lack of volume. It's the velocity of money has disappeared. This is almost unprecedented. So there's right now a lull before the storm, and people are not allocating capital to anything. And if we look at the 20-year chart, this volume, you really have to go back to the days before the China super cycle, where it really was a bleak, no bid scenario. Imagine if any of you folks that have worked longer term in the industry, how bad it really was in 2001, 2, and 3. And we have that level of lack of interest right now as we speak, even though the copper price is at an all-time high, and it's the front page of every newspaper now, the future of copper, of electrification, future of energy, and all roads go through copper. So this, just to end it, this is a good pictorial of myself. I'm a long-term patient investor. If you want to be a trader, that's probably good for the commodity, copper. But if you're looking at having a little more patience, looking at windows when the market's negative, this is a very interesting time, because it's the lull before the storm. The copper price, based on engineering and falling grades, and to enable what are resources. How does an engineer make it into a proven and probable mining reserve? Well, the most important input is going to be one thing: the copper price. That's the insurance policy that price, and that's going to lead confidence and sentiment into these high quality juniors and developers. And that's where the investor, I think, the money rotates into that long-term capital pool. So as Ben Graham once said, in the short term, markets are voting machines, and that's what we have right now. But in the long run, they are always a weighing forward. And if we look at the net present value of any copper development story, at $2 copper, the net present value is probably zero. When it passes $3, it becomes interesting. But when you get past $3.50 a pound copper, every 10 cents that the copper price goes higher, and you have confidence to use that as an input for the net present value, hundreds of millions of dollars of net present value are captured by the project by that company, and of course by the shareholders that support those ideas. So let's see where copper prices go. Up and down 50 cents is not a headline. That's the normal volatility of this commodity. But can we see copper at $6 and $7 a pound? I believe that's possible. May not deserve to be there long term, but it's the speculator that pushes it there, and that's where it settles out. And I continue to say before, and I continue to say it now, when we see copper go through $4 a pound in the future, we will be crying in our beer. It's going to be something like, how did that happen? Way, way long in the future. Meanwhile, I think it's going to be a very good sector and very good for employment and everything else for all the people working in this industry. So thank you. That's my view on where we are.
Well, welcome to everyone joining us for this MetSoc session on copper. And thanks, guys, for those presentations, Nick, Bernard, and Giovanni. We're just going to run an M&A session now, so anyone listening in or watching this, do send questions in. It kind of will help with the session. And guys, I'll say to you, don't necessarily need to wait for me to ask questions. Do riff off of each other, and feel free to agree or disagree with each other. I'm going to just kind of kick off and keep it fairly high level initially on the thesis, which is, and it kind of something that each of you touched upon. I think you said it's driven by politics, Johnny. And what do you mean by that? And what does that look like going forward?
Well, what I mean is, if you recall, 3-4 years ago, farmers in the United States were saying that for their agricultural products, the weather was no longer the most important factor. It was politics. And we recall the sanctions that were one day to the next brought in, and it forced people that almost immediately, they had no client, they had no customer. And then China was then sourcing their soybeans or what have you, and that's very difficult to derail, to go back. And what I say with the oil industry, oil is going to be a very good industry for the rest of our lives, but it's going to be something like tobacco. Those that are in it, or the lowest cost producer, or the best situated barrel of oil, is always going to have an advantage to the most expensive barrel to extract, or something that's going to be politically motivated. So to be clear, politics is the most important driver for oil for going forward. Whereas with copper, it's still going to be driven overwhelmingly by fundamentals, meaning demand growth. And if you really have these scenarios where the biggest economies in the world create an acceleration in all the different things that are all front page stories and bumper stickers and what have you, but if they actually start allocating this capital, this is going to be overwhelming fundamentals to copper. Even though you could still say it's politics, but it's going to be something where it's going to drive significant growth, 4 or 5% CAGR growth at the heart of it, in my view.
Okay, Bernard, do you agree with that? I mean, your talk was titled "Why It's Time for Investors to Pay Attention." What are your thoughts?
You mean on the influence of politics?
Yeah.
You see it happening right now in Europe, where I'm based, with the Repower EU communication yesterday by the European Commission, where they want to accelerate the shift to hydrogen. They want to double the target of installing solar panels to shift away from fossil fuels, mostly the ones coming from Russia. So there is an acceleration towards the greening of the energy supply, the energy mix, and this will indeed then put additional demand on copper, because you need it in all these applications, be it a windmill or a solar panel. And don't forget the interconnectivity of these renewable, decentralized production sources of energy that needs to be connected into a smart grid. So you will need more copper, even faster indeed.
But you make it sound like copper is going to be an instead of fossil fuels, not an as well. I mean, what's your take on that?
Sorry, copper instead of.
Well, you're saying obviously this move, government's moves towards the greenification of the energy supply, hopefully the reduction of the cost of energy supply for retail, but to the exclusion of fossil fuels. Now, is that practical? Can that be reality, or is that just wishful thinking?
That's the end game. The very ambitious plans to reduce the dependency quite fast. Yeah, that's a political push. The reality is different indeed. We will need more time than some politicians would like to shift to non-fossil fuels, especially if you think about the industry sector, and copper is an energy-intensive industry. You will need time you don't just overnight switch from a gas supplied anode furnace into a hydrogen anode furnace, because you need equipment and you also need the supply of green hydrogen.
Right. So Nick, what do we do in the meantime? Because there's this gap between what we want and what we can do. All of you did a great job explaining the supply demand fundamentals of the thesis, but some of your charts were quite you talk about today's production, what's possible in the near term, falling grades, hopefully rising prices. But it's still not going to be enough in this medium term. So what's the solution, and what does it do for copper?
No, clearly, I think we all talked about the requirement for new mine supply based on this accelerated demand due to the energy transition. In the very near term, we are seeing a bit of a kick in mine supply. So the industry has got 2 or 3 years to get its act together, to some extent. A lot will depend on pricing. Prices have to remain elevated in order for the capital to flow in, for balance sheets to remain healthy, to reinvest into project growth. And I think that ultimately, the way that we see the requirements for demand being met is in 3 ways. We have to have more investment in primary mining projects, as have been discussed, and there's clearly a lot of risk around how that plays out. We need to see more contribution from secondary market. I think we all touched on that. And that will require policy change and behavioural change across the developed world in order to unlock some of that sort of copper inventory that's not yet been recycled. And we will likely also see some form of substitution and thrifting as technology changes, because the difficulties of meeting those requirements are clear. So yeah, I think those are the parameters we're working within.
Okay, given those 3 points, Gianni, where's the money coming from?
Where's the money coming from?
Yeah.
Let's look at one contemporary example where if you're looking at Russia and there's people unloading assets and they're saying, well, who's going to buy it and where's the money going to come from? And this whole, the value of the ruble, it fell. It's now higher than it was before because they're doing this strange settlement of gas in the ruble. And so some countries are now still paying or doing this and then distributing the gas once they have it in the European Union, which is funny business. But the answer is China. China's very happy to partner with these assets. So you don't have to look too far. On a purchasing power parity, China is the world's largest economy. They're still growing. And it's something that this pipeline that I remember reading in the FT that they were the Power of Siberia pipeline, and they announced that it would be operational. What was the date? It was in 2020 or whatever, and they were to the month. And Putin and Xi were there, and they opened it. And then they have these other additional pipelines with all the gas that was stuck from Kazakhstan, which was never able to go west through Azerbaijan. This is now coming into China as well. And we need to be careful what we wish for. So the money is going to come from China, and I think with the lack of permitting, it's there's going to be a premium on current production and future production. Right. And the European Union and other people, they talk a big game with no action, And so let's see if this is going to have any teeth to it. And let's see what the Nord Stream 2 looks like 18 months from now, because it was only put on hiatus. It's not like they're going to deconstruct it. So if I'm a speculator, I would think gas is going to run in that pipeline in the next 24 months, and it'll be running into Germany. So we'll see. Time will tell, but I would say that's that relationship, the India, Pakistan, China, really the rest of the world. People should not be so fixated on the European Union, United States, because no one else really cares about these things. Modi needs the commodities to grow. He needs the energy.
Okay,
this is a relationship that continues in hand, and there's no sanctions between what I just discussed and Russia.
Okay, interesting one to see how all that plays out. You get a nice forecast from you. But let's stick with the money side of things, because if the money's coming from China, there's also a big narrative going on about needing to be ex-China, not dependent on China. So there's different things that can be invested in. We on this show are listening in because we're investors in the copper thematic, in terms of juniors or mid tiers. But what about the smelters and the fabricators and those guys? Where do they get the money from? How do they pick up the slack of this onslaught of demand that's coming? Gianni, I'm going to stick with you for that one.
We're talking about copper, correct? So
copper. Yeah, but you've got smelters and fabricators. It's not just miners involved in this. The money's got to go throughout the system. So where's that come from?
But where has all the growth in smelting capacity come from in the world?
Yeah.
Right.
So yeah,
China.
I mean, yeah.
Legacy Japan, legacy Korea, and maybe a little bit of the margin in India. But it's China. It's all China. It's a China story. Those are China dollars. And that will continue the case because we are not going to be permitting smelters in the European Union or in the United States or in Chile. So forget it. This is just not even going to happen. So the status now in the future will continue to be in the first three countries I mentioned, particularly in China.
Nick, do you agree?
So yeah, there's an interesting dynamic here where 2/3 of custom concentrate trade is heading to China. China is a huge proportion of global smelter capacity, as Gianni said, and China has been following this pathway, similar really to Japan and Korea did many years ago with investments in overseas mines in order to secure supply and ultimately copper units for their domestic demand. And China's doing the same on a large scale, and we've seen investments from China in mining operations overseas. Perhaps the difference is that Japan now is pretty much covered in terms of investments overseas and in filling its smelters of concentrate. China's maybe 15 to 20% there. So if it's to follow the same trajectory, that means a lot more investment in mining projects, which brings us back to Gianni's first point, which is where's the investment in projects going to come from? Well, the obvious one would be China. But what is interesting is that we've seen the rate at which China is investing in projects slow over recent years, and that's partly because there simply aren't the projects out there. Partly it's political. We haven't seen Chinese investment active in the same way in Chile, for example, as we did with certainly the Japanese big large trading companies. Where they have been active is mainly in the African copper belt, and that's linked to cobalt supply for electric vehicles. So there is two possibilities here. One is that we start to see that change and China invests in other jurisdictions, and that helps to secure concentrate supply to those smelters. Or we start to see build out of smelters elsewhere. And John has again already highlighted some of the issues with that. Nobody really wants a smelter in their backyard. In certain countries, but we are seeing it in Indonesia, for example. We're seeing more smelting capacity being built up and brought on shore. That's happening over the next couple of years. And to the point around India, India's population compared to China versus the amount of copper smelters China has versus India. I mean, India now only has one custom copper smelter. It has plenty of room to have more, and we're seeing that happening over the next couple of years as well. So I do think we'll start to see a migration of smelter capacity away from China, but that's not without its difficulties.
So would that mean a bifurcated market and bifurcated pricing? Because the EU, the US, the ex-China jurisdictions, they are creating. We said it was the first question: how does politics drive this? They are creating a demand which they cannot be self-sufficient on, it sounds like. So what does that do to the market going down the line? We've seen China weaponize the rare earths base. What's to say they don't do the same thing here? I mean, Nick?
Well, I think, goes back to a point about why we're not necessarily seeing the ability for Chinese to invest over recent years in major mining projects in Chile. And there's the concern over that. And that's why it's been limited to certain jurisdictions, such as the Copper Belt. So I think that's already in play, and there's a kind of a defense mechanism there already. But I don't think it necessarily we see a sort of bifurcation of the market. I mean, the way that it operates at the moment, it's, China needs raw materials and it needs it for its end use demand to build its products, which then come out into the global market and are traded. And yes, we're going through difficult times, and certainly the world has retracted a little bit from global trade, but I still think I don't see it because of, ultimately you can't get away from the fact that the areas of mine supply are in certain jurisdictions and the areas of demand are in different ones. So it's always going to be a global market.
Right, Bernard, I mean, where do you see this going? What's it going to do for copper price? You laid out beautifully the thesis, the demand, but and Nick also in his presentation talked about projects which are producing. Gianni's mentioned falling grades, increasing costs. We looked at inflation and supply chain issues more recently this year. Do prices dramatically increase over the next 3 to 5 years as a result? Does that help marginal projects, or are we going to be stuck with the dawning realization that just isn't enough copper production to meet demand anytime soon?
I will not comment on the evolution of prices because this is not in the remit of trade associations. We are to be compliant to antitrust rules. But I can comment on indeed the link that you just made, that a higher copper price, of course, will induce other projects in deposits which could have indeed a lower grade. I'm not fully in agreement with the forecast that we have seen on the grade going that dramatically down, because what we see now is new projects coming up with higher grades that were already in the back burner, but which were located in quite remote areas, where miners said, well, we need to put the infrastructure for energy, etc. Now, with the possibility of getting on-site production of energy, this makes these projects more likely. So there is part of the portfolio of mining projects which have a higher grade, which helps, I would say, slowing the ore grade decrease that we are observing. But of course, the price on the market will influence the decision of copper producers to activate assets or not, because again, as was underlined, this is not bauxite or silica sand or clay. We have a very low part of the rock we extract, which is the pure copper. So there is some cost associated, and that's the market mechanism that comes in terms of deciding which projects are going to go or not go. The element we have to integrate also in our business, like in most of the metals, is that it's a long lead time between the moment you decide to put a new capacity and the moment you can activate it. Permitting is part of it, but there is also a lot of technical constraints that, of course, makes the realization of the portfolio we see now not something that is going to happen in 2 or 3 years, but we see over time.
Okay, interesting. And Gianni, okay, so Bernard said grade isn't necessarily falling, but let's assume your hypothesis is right, that it does continue to fall. It suggests that less copper, higher costs across the board. So marginal projects will still be marginal projects. And to your point, you still, as an investor, need to pick a company or an asset with strong fundamentals.
In 2020, the copper rock that went through the mills of the 15 largest companies was 1%. It's now about 0.6, right? In 20 years.
That's the world average, 0.6 today.
The 15 largest copper mining companies, which produce the majority of the world's copper. So, and then the reserve profile of these 15 companies, if you look at it, it goes to about 0.4, the future reserve profile. So I would submit that copper grades are falling, and they will continue to fall. And it's a big deal. Every 0.1%, as I've already articulated, is tens of millions of tons of rock that has to be moved in addition for no benefit just to maintain the same yield. But cost basis, on top of that, you have to look at a fluctuating royalty regime and tax regime in some of the biggest copper mining jurisdictions in the world. And so when you're talking about projects of billions of dollars, if you add 5% or 10% between taxes and a royalty or what have you, and of course this is what always happens, because when the copper price is higher, you know, there are unions and there are people that want their participation. This is normal. This is also going to be cost inflation. And we witnessed this before from 2005 to 2011-12, where the copper price did in fact go much higher, but companies were making more money because they had it across the board. They had cost inflation. So I don't believe that the copper price, you know, psychologically it looks like it's, you know, over $4, but it's really like a $3 copper because of the loss in value in the US dollar, right? And all these things are of course priced in US dollar. So I think there's room for the copper price, and it would not be fantastical to suggest that we could see an inflation adjusted all-time high in the copper price. And there becomes this incentive for companies to accelerate new production, because we certainly have not seen that now. We haven't seen this big announcements of projects getting the green light just because copper has been higher now for 18 months or so. So I think this has to happen over a long period of time, and the bankers have to be involved as well. So I think you're going to see, that's just my view. I believe a combination of all those factors, it'll keep the copper price higher for longer, even though nobody in the world wants to pay a lot for their copper. There's which fabricator is interested in this? Nobody. So you have to basically run out of copper, and then the speculator has a role to play as well, and new price discovery. But it's a ballet that will take place really for many years to come.
Okay, Nick, thanks, Gianni. It's a good point you make. Nick, we've seen this in other commodities where the supply chain, i.e. the buyers, have had to change the way that they act. They're having to move either further upstream to secure supply, or they're having to sign longer supply contracts, because lots of conversations about critical mineral supply by governments, but not a lot of action in terms of cash available. But in this case, OEMs or other users do you think they are going to have to adapt and change the way that they behave? We saw the sort of debacle on the LME with regards to nickel, a couple of months ago. What's your view on what the future looks like for the buyers?
Okay, I don't see a scenario playing out anytime soon. I think you're probably referring to things like the lithium market and what have you for securing battery raw materials and so on. It's a very different market structure. There's a big terminal market. You mentioned the LME. Then there's a lot of stages between digging copper out of the ground and getting it to a copper foil that would go into battery. We're not, we talked before about where's the investment coming from. There is I suppose a scenario you could paint, which is whereby mine investment might come from OEMs at some point in the future. We haven't. There's no signs that that's happening right now in the copper industry. And I hate to sort of return back to the same point, but ultimately the investment is seen from large Chinese entities. A lot of them are actually fabricators themselves, that own smelters and refineries to fabricated products that are then going into sort of ultimately to end uses. So I suppose in that respect is happening to, not in the same way we're seeing in say the lithium or cobalt markets.
Right. Okay. And Bernard, there's a question sent in. Do you reasonably expect to see a world where copper demand can successfully be met, and if so, by when?
Well, that's the $100 million question. Indeed, as was underlined by Nick, we see that with the speed of developing projects and the speed of developing demand, there is a gap. But the industry is gearing up to address this with the limitations that we know. So that's the ideal picture where every demand can be met. But you could also question in all these scenarios, is the speed of growth of demand going to be what is forecasted today? Is it going to stick tomorrow? Because if you speak about, for example, we just spoke about batteries. It's not only about copper, it's about lithium to be available. And this is a bigger gap between demand and supply. So that could somehow erode also the surge of demand in these directions. Although there is a political and societal will to decarbonize, to go into electric vehicles. I'm the happy driver of a full electric car for more than 1 year. That's indeed the solution. But to get there, you will need the capacity of raw materials. And what you see today happening, China has been leading, but you see also now voices coming up in Europe saying we need a raw material strategic autonomy. If we want to get to that carbon neutral continent we ambition to be, we will need to have the access to the raw materials, be it inside the continent or outside, to meet that demand. And so there could be the limitation that will just also put a damper on the demand. So that's why I call this the $100 million question, because it's not only a question of supply, it's a question of how demand will evolve according to a multivariable environment. It's not only copper that will enable the transition. There are other materials, and some of them are extremely critical.
Right. So you think substitution or change in design solutions, it's not going to be enough? Are we going to have to just come at this whole green evolution slightly differently? Is copper truly the only answer, Bernard?
Oh, no, as I said, it's not only copper is a key enabler, it's essential because it goes into a lot of applications that are these technologies towards the energy transition. So it's heat pumps, it's solar panels, electric cars. But it's not only copper that you need. You need cobalt, you need nickel, you need lithium, you need rare earth, because a windmill needs permanent magnets. So that's rare earth bound. So if you look at the increase in demand of these components, these raw materials, we speak big multiples over the same period. So if you have a bottleneck there, that can jeopardize, that can put a shock in the development of demand. Now, I trust also the market and the operators on the market to find solutions. And some will look at substitution indeed, or some will look at new technologies. That's also how things evolve. So what I've shown, this doubling of copper demand over the period from now to 2050, this is one assumption, but this can change very quickly over time.
Okay. Yeah. Okay. Interesting. Gianni, given that you two were sort of focused on how to invest in copper, we've covered a few things here. Very briefly, I'm sure we could talk a lot longer on specifics, but as far as an investor is concerned, looking at the thesis, you get supply demand thesis. It says copper's got a long way to run, but you still need to back the right horse. So what should investors be looking for to increase their chance of success?
Well, it's a synopsis of all the things that I covered today. If you look at some of the lowest taxes for a company, a royalty that does not exist, and the rule of law and private property rights, the United States is a fantastic place to be looking at that type of business, particularly if a project has a private property component. And selfishly speaking, Faraday Copper, that we always looked for projects that had those parameters. We weren't looking to go to exotic locations or places where the politics could change the thesis. And of course, the variable, which is the when question. We don't like if questions. If you're successful, if you drill, if you have good metallurgy, we knew those answers. It was when, and the when was the copper price. And so with the leverage, the net present value of any development copper project, when you're talking about $2 copper, the net present value is probably zero. They're not economic, future projects, particularly in the medium to lower grade. But when you look at the copper price over $3 or $3.50, every 10 cents that the copper price goes higher, there is hundreds of millions of dollars of net present value that is then available. Not that you're ever going to give credit to a project at the highest copper price, but certainly there's a lot of torque, a lot of leverage. So me as a speculator or an investor that speculates, that's what I look for. And I think that's what people that further, want to look at the political stability, the surety of taxes and royalties and all those other things that change one day to the next in so many different places where copper mining does take place. But I think Arizona was the largest production area of copper for 100 years until Chile passed it, due to all the different things that we've seen occur there over the last 30 and 40 years. But it's still a prolific copper mining, the copper corridor there, and so many famous operations, and it employs so many people, and it's so very important to Arizona's economy and South Central United States. And hopefully that's something that they're able to agree on, because we are going to require more copper, and America should certainly be self-reliant in that category as well.
Okay, I'm just going to bring this thing full circle again. Back around to politics. Nick, what do you think the main dangers to supply destruction could be, given what we've seen in South America over the past couple of years, electioneering in Chile and Peru and Ecuador and places like that, which seems to signal to foreign investment that perhaps it might be problematic. We've seen NGOs, activism, First Nations disrupting operations in North America, South America, even in Europe. So, well, do you think that is the way copper's going to have to learn to live in that environment, or do you think there are other things that are slightly more serious that may damage supply?
Look, the locations of these projects hasn't changed for many decades, and these countries that you've mentioned have had the same issues for many decades. Changes of government from left to right particularly in Latin American countries, has been commonplace. To be frank, over the last few cycles, and if you look at where the future projects are going to come from, it's difficult to, with all the problems that say we're seeing, or risk, or perception of risk in, say, Chile, Peru, that we're seeing at the moment. If you look beyond those countries, it's difficult to see where else you would invest. I mean, we talked about the US, but projects in Arizona have struggled with permitting. Well, actually, a couple of projects all over the US have struggled to move forward in recent years due to permitting. Every jurisdiction has its issues with driving or barriers to entry in terms of driving projects forward. It's nothing new, but it does feel like it's getting harder, because there's another sort of added hurdle in the form of greater environmental oversight, and having to meet those criteria for investors as well. So, what's your carbon footprint going to be like? What's your social and governance profile like? And I think that's an additional risk to project development. So, yes, things are getting harder.
Bren, I'll let you have the last word, please.
Indeed, on that front of environmental, social responsibility, the industry is taking steps. The industry is proactive, and the industry has introduced 2 years ago the copper mark, which is an independent assurance mechanism that makes sure that the copper sites which are certified with the copper mark to abide by a list of 34 criteria, which are on community rights, on environmental protection, on social protection, on social governance. So the industry is taking steps there, because we do recognize as actors who are also integrating the communities where we operate, that there are rules that we do have to do our best to abide with, and to be a positive contributor, not only to the economy, but also to the social life in the communities where we operate. So the copper mark is one initiative. It's independent from the industry. It has been created 2 years ago. And what we see is that it's taking traction.
Okay. Look, gentlemen, I'm going to wrap it up there. Lots of questions haven't been answered. We'll forward those to you, and perhaps if you want to get back to people, you can. So I want to thank Nick Pickens from Wood Mac, Bernard Respaut from the International Copper Association, and Gianni Kovacic from Copper Bank. Appreciate your thoughts. Anyone wants to reach out to these guys directly, feel free. And if you want to join us on our weekly battery show at cruxinvestor.com, please feel free to do that too. Thank you very much, gentlemen.
Thank you.
Thank you very much. Have a good
Pleasure.
day.
Thank you.
We are going to now introduce the next set of speakers, which will be followed by another Q&A session. So coming up next, actually great sessions these. Copper Trading is the title, and that's John Pattenden from Ocean Partners. We've also got a conversation around smelter terms from Peter Monroe and Mineralis. Good one there. And then Kunal Singh from Glencore is joining us to talk about recycling. So do join us for that, and I hope you enjoy that session.
And welcome to my presentation on copper concentrates and trading. My name is John Pattenden, and I'm a copper and gold concentrate trader within Ocean Partners Limited. Ocean Partners is a non-ferrous concentrate commodity trading company dealing in trading of base and precious metal concentrates, byproducts and secondary materials, mining services, risk management, marketing agency and logistical services, prepayment and project finance, consultation and technical services. Why does copper concentrate trading exist? The process of mining is to extract minerals from deposits that can be further used for the growth of the economy and technological advancements. Copper is a soft and very conductible metal that leads into high usage within the motor industry, especially electric vehicles, as the world looks for more environmentally friendly forms of transportation. For this, the raw materials need to be processed into a form that can be openly used. Copper has two main processes to obtain a 99.99% purity known as copper cathode. The first method is solvent extraction and electrowinning, which is a two-stage hydrometallurgical process. The second method is to smelt concentrates, which is done by a smelter, the cathode. A concentrate is simply a small mass containing raw elements which come from the mined ore. Historically, smelters were located next to mines and took feed directly from the mine production without any transportation. Yamenta and Bingen are good examples of this. However, some countries then took strategical industrial decisions to boost economy by building high capex smelters without the copper ore reserves. This is known as custom smelters. This first started happening in South Korea and Japan in the 1980s and 1990s and has later been adopted by China. How big is the global copper concentrate market? The total size of the copper concentrate market is roughly 75 million dry metric tons per year. Approximately 1/3 is processed through integrated smelters, leaving 50 million tons being delivered to third-party custom smelters. The largest producing country is Chile, and the largest consuming country is China. From the graph, you can understand that the copper concentrate market is heavily dependent on China's demand. Russia and Chile are well integrated, although these smelters do buy additional external concentrates if their capacity allows. This has become an increasing problem for the Russian smelters due to recent events and companies considering their other options. However, Russian smelter outputs currently have no restrictions from the market and are freely deliverable. On this side is a typical specification of a copper concentrate. Every mine has a different mineralogy and therefore a different concentrate product. Similarly, every smelter has a different methodology of extracting the metal, and so recovery rates are more amenable to certain qualities and grades. A concentrate value is determined by terms alongside the contents of payable and deleterious penalty elements. The deleterious elements have a bigger limitation on the potential smelters due to the individual makeup of these and the processing capacities. Furthermore, there are country classifications to consider and their impact. For example, China considers concentrate to be importable as copper concentrate if it meets all of the following conditions: copper greater than 13%, lead less than 6%, arsenic less than 0.5%, fluorine less than 0.1%, cadmium below 0.5%, and mercury below 0.01%. If any of these are not met, then the material cannot be imported into China as a copper concentrate. Subsequently, if imported into China under another classification, it could have non-returnable VAT applicable, which obviously means the terms a smelter would pay for the concentrates are affected, making it less economic for the mine. Currently within the market of copper concentrates, arsenic is the biggest deleterious element. The association of copper with arsenic within the ore body. Generally, this trend is increasing, and so smelters and mines are going to have a growing problem. Advantages of selling to trade for miners and buying from trade for smelters. Smelters typically want to assume risk associated to the material, as well as releasing payment as late as possible, whereas mines naturally prefer the opposite. The time lag and risk difference combined with the individual mine and smelter objectives is that going to the trade is advantageous for both sides. Concentrates are expensive and therefore tie up a lot of capital. Mines typically only have one income stream from concentrates, and therefore their cash rate is only improved when they can monetize their product. This also enables the mine to move forward and have further funds for future production and hence cash flow. This case is similar for smelters considering their output of copper cathode. It can also be important for the mines to fix in their future cash, or for a smelter to fix their input cost. This can be done by agreeing unchangeable terms with the market. At the same time, this removes market changes within demand versus supply for both the mine and the smelter. Another potential market change is the price of metals. The trade can also offer further facilities of being able to lock in and price the deliveries, meaning the mine and smelters de-risk and remove the price fluctuations. As Chile is the largest producer and China is the biggest consumer, you can consider the distance the material needs to travel. With the mine delivering to a convenient location and the smelter receiving to a convenient location, they remove themselves completely from the logistics chain that the trade now needs to handle. Additionally, if the material is too small or expensive to ship in bulk, then the trade can finance and hold stock while more production is completed. Within the current market, the shipping costs are significantly increasing, while availability is becoming an issue. Late deliveries or expensive shipments are no longer the responsibility of the mine or smelter. With the worldwide flow of copper concentrates, the trade have a wide supply and customer base, holding multiple open contracts. So there could be situations that could benefit the mines and smelters, such as organize and swap, that could outperform the market. Furthermore, the trade could have additional solutions for materials which others cannot provide. Blending is a perfect example, as the mine could produce a product that isn't processable for a smelter. However, the trade could blend this and other materials homogeneously to deliver an agreed and acceptable quality to the smelter. Without this, the mine doesn't have a product to sell, and the smelter doesn't have a material to buy. How is the LME involved? LME stands for London Metal Exchange, which is a commodities exchange that deals in futures and options. It was founded in 1877, however, traces back as far as 1571. The LME is the largest market for futures, forward contracts, and options on base metals in the world, trading around $11.6 million annually. From miners' smelters to the trade, there typically is a provisional and final payment. Provisional is based on estimated data for the material, whereas final is when everything is known. Both these require valuation of payable base metal. This provisional valuation can be done with a live element price, whereas the final valuation uses an unknown future price at the time of provisional payment. There is a high correlation between the base metal price from the LME exchange to the final value of the concentrates. Therefore, a mine and smelter could look to remove this unknown future price risk if the trade are comfortable accepting that market price risk. The trade can individually agree these prices with the mine and smelter. Due to copper reaching record high prices, this increases the capital requirement for the trade assisting mines and smelters. It has been seen that some traders have been forced to source additional cash to cover these margin requirements. For precious metals, the exchange is LBMA, which stands for London Bulletin Market Association. All prices are consolidated and freely available on Fastmarkets MB. I hope you enjoyed the very quick presentation on trading activities for copper concentrates, and would always encourage questions which have further value in your understanding. Thank you to Boyd and the rest of the team for offering me the opportunity and inviting me to do this presentation. Thank you very much for listening.
Good morning, ladies and gentlemen. My name is Peter Munro. I'm a principal consultant with Minerals Consultants in Brisbane, Australia, and the topic is some basics on copper smelter terms. The copper concentrate sales contract, well, it's been unchanged for over a century. We'll look at the structure of it, the payables and deductions, the penalties, the commercial issues in it, and in the future. And I'll indulge with some thoughts of what should happen to the copper concentrate sales contract in the future. The payables. Normally for copper, you pay for, say, 96.5% of the contained copper, subject to a minimum deduction of 1 unit. Now, 1 unit means 1%. The payable and deductions can vary depending on the concentrate grade. Lower grade concentrates produce more slag, thus reducing the copper recovery to copper cathode. So for a concentrate at 30% copper, the payable copper content is 96.5%. But for a copper concentrate at 24% copper, the payable content is 24% minus 1%, that equals 23%. And so you've got 23 over 24 times 100, so you're getting paid for 95.83% of the copper. For gold, the payment also can vary depending on the concentrate grade. Some copper smelters are more focused on precious metals than others. We'll use a high 97.5% of the final gold content in this example, subject to a minimum deduction of 1 gram. So if we have a copper concentrate at 40 grams per tonne, the payable gold content will be 97.5%. For a concentrate with a gold content of 2 grams per tonne, the payable gold content is 2 grams per tonne minus 1 gram per tonne, leaving us with 1 gram per tonne. That is, you're only going to get paid for 50% of the gold. Silver, normally pay for 90% of the contained silver, subject to a minimum deduction of 30 grams per tonne. Now, therefore, for a concentrate grade at 200 grams per tonne of silver, you would deduct 330 grams per tonne of silver, and you'll get paid for 170 over 200 grams. That is 85% payment for the contained silver. Now, the deductions. The treatment charge, or TC, currently that's US $65 per dry metric tonne of concentrate. That's the 2022 Freeport terms with the Chinese smelters. The treatment charge originally represented the cost of the smelter of processing the concentrate, not now. It's just an arcane mechanism for transferring money from one party to another, and it's driven by the demand-supply situation for copper concentrates. The collapse in the TCs and the refining charges has been caused by the huge expansion of the Chinese custom copper smelting industry in the last 2 decades. The refining charge, this is quoted in US cents per pound of payable copper. This is again the 2022 Freeport terms with the Chinese smelters. If we take our previous example of a 24% copper concentrate grade, the payable copper value is 24% minus 1 unit equals 23%. And if we put that into pounds of copper, that's another charge to the smelter of $32.93 per dry metric tonne. Now, the treatment charges and refining charges and price participation start in October and are finished by the end of the year. This establishes the benchmark terms by the major miners and smelters once they've agreed to these, and these are the industry standards. Penalty elements and compounds, these can include things such as arsenic, alumina, antimony, bismuth, cadmium, the halogens of chlorine and fluorine, lead, mercury, nickel and cobalt, selenium, silica and zinc. These can be divided into 3 types: those that increase process costs and decrease the recoveries of the payable metals, those with environmental consequences, and the third group, which are a combination of both. Interesting to point out that, for example, iron oxide hosted copper gold deposits and sedimentary copper deposits, there can be an issue with radioactive elements such as uranium and thorium and their decayed daughter products. The penalties are imposed above a threshold and can escalate above higher threshold values. If we take arsenic, for example, the penalty will be $2 to $3 per dry metric tonne per 1% arsenic above 0.2% arsenic. This rises to $5 to $8 per dry metric tonne per 0.1% arsenic in the range of 0.5 to 1% arsenic, and then $8 to $12 per dry metric tonne per 0.1% arsenic above 1% arsenic. However, in some situations, the quality issues cannot be resolved by paying a penalty. The concentrate is unsaleable. And the following shows the limits for material for import into China. This is by government regulation. So you can't sell copper concentrates into China that contains either greater than 0.5% arsenic, 6% lead, 0.1% fluorine, 0.05% cadmium, or 0.01% mercury. Exceeding any one of those means the concentrate cannot be imported into China. And you understand the sensitivity of the Chinese to these pollutant elements. For example, in 2014, a Chinese government survey found that 16.1% of all soil and 19.4% of all the farmland in China was contaminated by organic and inorganic chemical pollutants, especially lead, cadmium and arsenic. This equated to 250,000 square kilometres and is equivalent to the arable farmland of Mexico. Japan doesn't have a government-imposed upper limit on arsenic content, but what is euphemistically called administrative guidance by the Japanese government means that any concentrates sold into Japan have to be less than 0.15 to 0.2% arsenic. I'll talk more on the subject of pollutants later. The commercial terms, these are usually fixed over the life of the contract. The quotational period, which is the reference price paid for the copper, gold and silver, is usually for a single month. It's from the month of shipment or the month of arrival of the shipment. Sometimes the options are granted, usually to the buyer, to adjust these, and sometimes the buyers request back pricing, in other words, to price it in months previous to the month of shipment. The price references are the prices pertaining on the London Metal Exchange and the London Bullion Market, and the publication references are the Platts or the Metal Bulletin. Then the commercial, there's usually a series of boilerplate, what we call about the shipping, weighing, sampling and moisture determinations, the assaying of the material, including umpires and splitting limits, when title changes hands and risks insurance, the invocation of force majeure, the arbitration and the choice of law for which any disputes in the contract are to be negotiated, etc. Now, in my career, I've encountered many myths and misconceptions, misunderstandings that miners have. One common one is that smelting and refining is a profitable business that makes money by gouging the poor miner. I'll point out that smelters use the same technology. For example, a lot of smelters use MetSoc Autotech flash smelting. They treat the same feeds. In other words, no one's got a head grade advantage. Like one guy in a mine might have a head grade of 0.5% copper and somebody else has got 3% copper. Well, they're all treating a copper concentrate at 25% copper. And since the elimination of price participation in 2005, 2006, the copper smelter's share of the copper price has fallen from around 20 to 25% to what I'd call as a derisory 5 to 7%. And so the miners have appropriated 75% of the value of the copper that used to go to the smelters. Some people see the value of the concentrate, in other words, say it's gold and silver content, but they ignore the cost of the smelter. For example, the smelter might be limited in its ability to handle arsenic or sulfur. So that will put a limit on how much material they can take. And therefore, they will obviously, being rational people, they will take concentrates which maximises their revenue and compared to their constraints. And another thing is you read about people talking about their concentrate receiving a premium. No one receives a premium. I've been looking at copper concentrate contracts for over 50 years. I've never seen one yet. If you've got a good grade concentrate, it just means you've got a better chance of selling it into a concentrate surplus market. They also see strange things like smelters want sulfur on the concentrate because it's free fuel, or smelters want silica because it slags out the iron, thus removing the need to buy flux. I have never seen payment in a copper concentrate for sulfur and silica. And generally, miners are ignorant of the increasing environmental and industrial hydrogen pressures applied to the smelters. Smelters have myths and misconceptions and misunderstandings about the miners. The main one is that the fact that many miners could make better quality concentrates if they were given appropriate incentives. I personally think this may result from the demise of the integrated mining and smelting company, where miners and smelters are dealing at each other through commercial departments and or the traders, and you don't have the technical people in the smelter talking to the technical people in the mines. So copper concentrate sales terms, as the French would say, plus ça change, toujours la même chose. There's been virtually no change for them over the last 20 to 30 years. The contracts have got 19th and 20th century technical terms, and these are driving the outcomes, versus we've got 21st century issues. And the biggest one of these is pollution. I think it's wrong to make concentrates that contain excessive waste and pollutant elements, and moving the associated disposal and containment issues from a remote mine site to a smelter located near a population centre. A significant proportion of copper concentrates are actually low quality, as measured by the weight % valuable mineral. It does not achieve the 85% benchmark that we normally use. And the base metal industry, I think, is inherently flawed if the current commercial arrangements encourage the miners to make low quality concentrates without appropriate incentives to use the best available technologies to make better ones. As an example, let's look at arsenic. A world-scale smelter produces 300,000 to 500,000 tonnes a year of copper. At a 25% copper concentrate grade, that means a 500,000 tonne a year unit requires 2 million tonnes a year of concentrates. If the arsenic content is 0.5%, that means it has to deal with 10,000 tonnes a year of arsenic, or 13,000 tonnes a year of arsenic trioxide, and currently arsenic has no significant industrial use. This material has to be disposed of. Arsenic's only technical function in extractive metallurgy is to be in sufficient concentration in the electrolyte when electro-refining to sink the anode slimes. And some very large copper deposits, such as La Granja in Peru and Tampacan in the Philippines, remain undeveloped because metallurgical test work has shown unacceptably high levels of arsenic in the copper concentrate. I think the copper concentrate sales contract is unfit for purpose, given the increasing concerns about the environmental issues, and we wonder how long the smelters can continue to carry the burden of dealing with pollutants. The only remedy for this, I think, is the smelters are going to have to increase their share of the revenue, or the miners are going to have to incur additional costs to remove the pollutant elements such as arsenic, mercury, etc., from the concentrates before they're dispatched to the smelters. To use a current vogue word, I don't consider the current position is a sustainable one for the miners. Thank you very much for listening.
So thanks everyone, good morning. My name is Kunal Sinha. I'm the head of recycling here at Glencore. Just wanted to cover the few topics mentioned on the agenda, also give you a quick background on Glencore's involvement in recycling and especially our copper recycling activities, and then happy to take any questions. So just quick background on Glencore. If you're not familiar with the company, we are one of the larger natural resources companies in the world. We market 60 different commodities. Key metals are in the non-ferrous sort of space, but we also have other metals. So there's metals and mining vertical, energy, increasingly a lot more recycling, and of course our marketing business. In terms of our history in recycling, and I'll go into a little bit more detail, but especially when it comes to copper, we have been doing recycling activities for the past 75 years. A lot of that in Canada, using our Horn smelter and the CCR refinery. And what we have recycled over time has changed, but we sort of keep up with the times, look at the various secondary feeds, and improve our technology to recycle more copper-bearing feeds. Just a couple of facts that support that activity, I think very relevant these days. The copper that we produce from our recyclable sources has about 80% lower carbon footprint versus copper that's produced from a primary mined supply chain. And we've been working on various business models, talking to various OEM stakeholders, and sort of encouraging more recycling and use of more recycled copper. So I can happy to get into some of those details later on. Won't spend too much time on this slide. It's fairly dense, but just quick history. We started recycling for copper actually in the 40s. We've recycled all kinds of feedstock, including electric motors from when Quebec and Ontario changed their power generation frequency. But one of the most significant recycling streams we manage, copper bearing, is end-of-life electronic waste. We've been doing that since the 80s. We have processed more than 1 million tons of circuitry and components and wires from discarded electronics, thereby helping prevent those things going into landfills. We are one of the world's largest recyclers of end-of-life electronics, as well as battery metals. So I know we are talking copper, but sort of from a nickel cobalt perspective, we do that quite a bit. In terms of our recycling volumes, I think the numbers here are a bit outdated. The previous slide probably has the more updated numbers. So this 2021, we recycled about 40,000 tons of copper, 77,000 ounces of gold, 1.4 million ounces of silver, some platinum, palladium, and other metals. I think one of the questions from the group was, how do our recycling activities fit with our primary business or primary activities, whether they or in general in the industry, how we view these? Are they in competition? Are they in sync? So our view is it depends on the model that you're using for your recycling business. We have certainly seen various models. There are some businesses that are 100% based on recycling. There are other models that combine primary and recycling. We are certainly in the second camp. We see our primary and recycling businesses are very much in sync, very much in harmony, and they actually support each other. And I would say the way it works is we have spent significant capital in terms of building these very complex and very versatile metallurgical assets. They have a very large capacity for treating input raw materials. And because of that significant scale, we get a lot of economies of scale. And what we can do is recycling feeds can enjoy those lower costs on a per unit ton basis because of that scale. So we are able to treat primary concentrates as well as recycling feeds at the same asset, which allows the recycling part to benefit from a lower unit cost. At the same time, the recycling feeds, as I'm sure anyone in copper industry is aware, like the primary copper ores, I think there's a declining ore grade, and there's other challenges with the newer feedstock having more impurities and such. So the recycling part actually helps the primary because you can get per ton of recycling, you can get a lot more PM, PGM content, but also overall it can help you lower your carbon footprint. So they actually work very, very much hand in hand. That's how we manage our recycling business. Anyway we do it, it's very much a combination of primary and recycled. And happy to elaborate on that in sort of Q&A or others. Sort of quick overview of what forms of copper we recycle or we see being recycled. Certainly, what's very popular, well understood, is the more higher grade copper recycling. So that would be your heavily traded, easy grades of copper scrap, which is number 1, number 2, and going down in grade. We do that, so we do recycle copper scrap that falls in that category. But our view is our metallurgical assets can handle materials that are much more complex than, let's say, birch clip or number 1 sort of copper. So while we have capacity for those, we focus a lot more on the lower grades of copper bearing recycling feeds or waste streams that actually are very difficult to process metallurgically otherwise. So one of our largest feed groups is actually end-of-life electronic, discarded electronics. We also recycle a lot of gold carbons which is post-manufacturing waste from gold mines. A whole host of materials that let's say we call smelter grade, but that would be copper-bearing inert material from other mining operations or other industrial operations, even some chemical manufacturing. And then lastly, over the last few years, we've also been recycling a lot of battery scrap, which is picking up pace with the proliferation of EVs and EV batteries. All of that contains copper. Our assets have the versatility and the range to recycle all of them responsibly and in an environmentally friendly fashion. So we target anything that has copper, from a very low grade to extremely high grades of copper, like number 1 copper. And then, of course, because we have the smelter and the refinery, we are able to get to all kinds of finished products. I think in terms of just the outlook and why recycling is important for a copper perspective, there are various numbers out there in terms of how much copper is needed between now and, let's say, 2050. And I think we can argue about these models and what that number exactly is. But roughly speaking, if you believe that we have to get to net zero by 2050, work backwards and agree on the very narrow pathway to getting there, which includes more renewable energy generation, electrification of mobility, and the supporting ecosystem and the batteries, then essentially, no matter which model you look at, it basically requires us to double our refined copper output and demand, basically, between now and 2050, which basically means adding 1 million tons of copper every year between now and 2050. So that seems to be a bit of a daunting task, just from a pure primary mining supply. So basically, yes, you need to get as much primary supply going as possible, responsible mining, but it's still difficult to meet that demand. So we see recycling plays a very important role. We don't see too many substitute for copper when it comes to electrification. There's a reason why copper works so well for electrification purposes. So I think our view is recycling plays a dual role in helping meet the net zero goal, which is why I think recycling of copper needs to get more attention. You need more recycling capacity. One, it helps you on the supply front. You can recycle more copper and put it back in the ecosystem. But two, if you work with the OEMs, the industry players, the civil society, government, the more we can do in terms of circular economy, it reduces some pressure on the demand. So again, there's various studies, and again, these are difficult to pin down exact numbers, but there's various studies that say you can't go from where we are as a society to net zero simply by changing the energy mix and electrification. You'll still be left with some residual emissions, which can only be changed by changing consumption patterns and habits and developing a more circular economy. So we think, recycling dovetails from both sides. And then, of course, copper is a big driver of the electrification story, and hence recycling needs to play a much bigger role going forward. So just a few thoughts on what we are doing about this. So if you agree on this paradigm shift, pushing and driving the circular economy further, and we have been recycling for decades. So how do we look at that going forward? What is the same? What's changing? A few things we think would need to happen. All of them are happening to some degree, but needs to be done a lot more. One is we need to sort of, where possible, get away from this sort of linear thinking to a more circular thinking, because otherwise you just have a mismatch of goals. So a very good example is if you look at the electronics industry, OEMs have a lot of targets for recycled content by 2030. But if you do not, if that doesn't translate into recycling capacity downstream with recyclers and smelters and refiners, then OEMs cannot actually meet their goals. You may be at 2030 and not actually have so much recycled content because the downstream supply chain didn't plan for it or didn't have the assurance that that capacity will get used. Circularity allows everybody to talk to everyone else versus a linear sort of approach. And it is already happening, which is very positive. One very specific example is within the electronic space, which uses a lot of copper. Glencore and a few other players came together 2 years ago. We defined and launched this Circular Electronics Partnership, which has some of the key OEMs and recyclers and smelters. And we are working on defining these business models that helps the electronics industry get to recycled content goals by 2030. The other couple of other examples, I think we need to look at our regulatory frameworks for very good reasons. Most of our regulatory frameworks, trans-border movement frameworks, were actually designed to deter the movement of waste, and specifically hazardous waste, and which, for all the right reasons. But at the same time, if you look at it today and recycling capacity, the responsible recycling capacity at scale does not exist in all parts of the world. So we need to look at newer frameworks that protect the interests because of which we put these waste movement frameworks in place, but we still need to allow and make it easier for a lot of copper-bearing material to cross borders so that it can get recycled at scale. So that's I think, an interesting sort of dilemma that a lot of people are grappling with, a lot of agencies, organizations. So where possible, we are working with them. We are working with policymakers to raise awareness of this issue. Then we just need to increase our capacity in terms of what we can recycle. And from a Glencore perspective, we are increasing our capacity at our existing assets, but we're also doing deals with other partners where we can get access to recycling capacity and help them recycle a lot more. So we recently announced a deal with Li-Cycle, that's more in the battery recycling space, which has copper, but also one in the UK, which is also battery recycling. And there's a few more probably to come. Lastly, I would say we just need to change how we think about waste. I think if we think about waste, we'll always look at it as waste. I think we all need to think of waste more as post-consumer resources. Take it from that perspective. It's a resource. It shouldn't be wasted. There should be technology to recover. There should be, regulatory frameworks to move it to where it needs to go and have that recognition. So I think there's a long way to go, but there's positive steps being taken in all of these areas, and hopefully that will make a big dent in terms of recycling capacity, volumes, and goals. I won't go into this slide a lot, but this is a specific example on e-waste. It sort of shows the current end-of-life processes and where you can have leakage and where we are not really good at capturing a lot of e-waste, which has a lot of copper, and it still goes to landfill. And then on the right side of the slide, that's from Responsible Business Alliance, which is we are part of, and it's part of the CEP effort. An effort to define these flows and work with all of those players, the tier 1, tier 2 recyclers, the OEMs, the brands, and the smelters. An effort to work with everybody to try and increase the flows to the formal ecosystem and decrease the flows of undocumented e-waste to the informal sector, and thereby increase the amount of copper and other metals we can recover and put back in the economy. So I'll just end by just highlighting some of the work that was done for the Circular Electronics Partnership. As you can see, some very good partners there, all of whom have very ambitious and well-stated goals for net zero recycling. The work is ongoing. There's a lot of interesting projects that would come out of this work. And while this is focused on electronics and end-of-life electronics e-waste, our view is similar models need to be created for all sorts of industries, and you will get similar positive outcomes. And a big one is battery recycling. Again, has a lot of copper, not just nickel, cobalt. So we'll see, hopefully, these platforms take shape in all of these areas. So those were my sort of prepared remarks. I will stop sharing the screen and happy to take any questions.
John, welcome. Kunal, welcome. Peter's back. I think that's the Holy Trinity. So, gentlemen, thanks for joining us. I'm going to start with you, John, if I may, and I'm going to pretty much try and fit in as many questions sent in as possible. So, John, can you contrast the role of the LME in copper versus other non-LME battery metals in terms of how investors make decisions? This is in light of the, I think what happened with nickel pricing and LME's involvement in that 2-3 months ago. How does that affect copper compared to non-LME battery metals?
I don't think we're going to have the same issues that we had with nickel. I think it's a much more sustainable model and pricing system within copper, than compared to nickel. Especially when you look at the volumes that are traded daily. I think nickel is a case of where people punted, and there are certain names within the market that are freely publicised that those people were punting the market. Whereas I think copper is much more of a underlying business with the actual, let's say, uses. For me, no, I don't think there's any substance behind that.
Right. Okay. And your take, I mean, we talked about this in the first session with regards to the influence of China on pricing and weaponizing their control on the market. I mean, do you see that as a factor?
Well, they are definitely, say, the biggest share, obviously, of the market. But I think also it's worth pointing out that currently they have the least strict, let's say, material grades or concentrates. So although they have these hard lines, unofficially there are other third-party custom smelters, let's say in China, in North America and in Asia, that have more restrictive penalty elements than currently China accepts. So if anything, you could say that environmentally they are behind the times in the rest of the world. So if they become and reduce those limits, I don't think it's going to significantly, let's say, weaponize the market.
Right. Okay. And Peter, one for you. You said something which was kind of quite a lot. In fact, you finished on it, which was the current situation is not sustainable for miners. What specifically were you referring to?
Well, if the copper supply is primary copper is going to have to double, then that means you're going to have double the pollutants. And as I said, since 2005, 2006, when price participation was abandoned because of the demand from the Chinese copper smelting industry, as I said, the miners have appropriated 75% of the value that used to go to the smelters. And I just can't see it sustainable. We've got a situation where we're shipping, where the miners could make better concentrate grades, and the concentrate contract actually emphasises quantity, that is copper recovery, over quality. I just cannot see, on the one hand, where we can be espousing decarbonisation in the great green world, and yet we're shipping huge amounts of very unpleasant things, for example, like mercury. Now, for example, mercury ends up in the sulfuric acid. Sulfuric acid is used in fertiliser, and that means you've got mercury entering the food chain. So, I cannot see that this situation is sustainable. The miners are going to have to either remove the pollutants at the source, which will mean a more expensive process. They can do that either by mineral processing means, physical beneficiation, grinding finer, more efficient flotation, or they may have to employ chemical methods. to remove things like arsenic, or they're going to have to pay the smelters to do it. Because currently, for example, the penalty elements, they are not being charged at the actual cost of the smelter. As I said, the concentrate contract, just an arcane method of moving money from party A to party B. It does not actually represent the true costs of smelting and the cost of dealing with the pollutants.
Right. So if your margins, or sorry, smelters margins are being eroded, and I think you touched upon some of the pollutants in there, arsenic specifically earlier on. If these smelters can't adapt or keep up with this, I mean, is this going to become a hurdle for developers in terms of getting finance and achieving the sorts of margins that they need?
Well, at the smelters, if you have got a concentrate that's a very bad concentrate with a lot of pollutants in it, it's not going to find a home, or you're going to have to have a more expensive process to clean that concentrate up. And I just can't see that people, particularly in China, and yes, standards in China may well be, as John pointed out, perhaps lower than the rest of the world. But if you compare what's happened to China over the years, I think the Chinese government is probably actually petrified at the thought of pollution. It's a major issue, because they've got to keep the urban middle class on side. And if you go and look at every Chinese copper smelter, there's just about 1 million people living around it. So I just don't think this is a sustainable position.
Okay.
You're going to have better grade concentrates, and they could wake up one morning and find out that the Chinese have said, okay, the limit for arsenic in China is 0.1%.
Right. That'll be interesting.
Because that comes back to the point of government. If you're pushing to decarbonise, and that's a government push thing, well, people aren't going to be prepared to accept, we're going to decarbonise, but by the way, that means there's going to be a lot of arsenic buried down the bottom of my backyard.
Terrifying thought. And a conversation for another day, I suspect. I just want to bring into the conversation, and maybe we can also riff off of each other on some of the topics here. Obviously, you're talking about recycling. I think we didn't kind of get too much into kind of ESG drivers, but I think Peter's starting to he's brought that into the conversation, which is what does recycling? What does recycling impact on investor decision making? What does that look like? I'm talking funds. Are they going to be making demands of the industry as a whole? But I guess I'm slightly confused. But I say what ESG drivers can actually affect the behaviour of miners like yours and companies like yourselves. Really, how do companies take advantage of this? Will governments have to put incentives in place to make you do it, because you get efficiency through scale, but you've got to be incentivized to kind of commit to that money, don't you?
Yeah, I think recycling, there's a few ways to look at it, right? So in general, recycling is, depending on what you're recycling, it's actually a fairly profitable business. So if it's a profitable business, you anyways are going to do a lot of it, as much as you can. Plus, it has a lot of good aspects in the sort of the newer way of measuring ESG credentials. So I mentioned, if I look at the copper industry, I mean, there's various studies. If you look at it, the recycled copper has an 80% lower carbon footprint. So if you are producing copper and you just increase the amount of copper you produce from recycled feeds versus primary, your overall carbon footprint goes down. Plus, you have more sort of, from an economic perspective, you get more precious metals, PGMs, through recycling feeds than perhaps through primary mining. So there are some natural tailwinds for why companies would want to incorporate more recycling into their mix if they can. But I think the more important thing going on is, so why focus on recycling and what's the impetus is actually it's the demand side, which is, and it's a bit different in US versus Europe. So if you take Europe, for example, there's going to be some going forward some sort of mandated or some directives on minimum recycled content. And I think it's loosely defined. So it's not saying specific metals. It's saying, the overall volume of what you put out, there has to be X% or X tons of recycled material. And that's creating a good sort of ecosystem for more recycling for all metals, but it includes copper. And then US, I think, hasn't in the past, and I'm not sure going forward, US or Canada would implement similar directives on minimum recycled content. But sort of last point, what's changing behaviors here, we have a lot of end consumers of copper asking us for these things, is more the consumer sentiment is changing. So in the past, whatever you're buying, whether a car or a device, you would probably look at form, function, and cost. But it looks like in certain sectors, certain consumers, on top of all those three, there's another element in their preference set, which is the ESG footprint of the product they're buying. So that is beginning to change the thinking of product designers and OEMs. So increasingly, there's a lot of inquiries about, how much recycled metal can I get, either directly or indirectly into my products. So does that mean there is a premium for recycled copper, let's say? I think that's an open question. I don't think that's decided yet. Some companies are trying to set that. I haven't seen anything definitive, but these are all various sort of positive supporting factors that will push more recycling.
But sorry, with that, so there's a kind of danger of kind of greenwashing recycling in a way, right? And you want to step around that. You've made it clear, said we need to be able to make money from this. So there's a commercial imperative, but form, function, cost, and ESG in terms of decision making. I'd love to see the numbers around that in an environment where people have got less disposable income and discretionary spend on whether it be cars or other. Because government's driving that initiative is one thing, but taxing people to the extent where they haven't got the money to spend on these things is another, right?
Yeah. So I think those things have to balance out. So at the moment, the way I look at it, I think, I don't think people are looking to pay more for a phone that has more recycled content than a phone that doesn't. But it's becoming more of a license to operate. So if I have two phones that I like everything about, but one of them, I won't name the company, but you can figure out, has a good impact report saying I am already using 100% recycled of one metal and have a target to use recycled plastics and recycled whatever. I think what the OEMs are beginning to figure out is you win and your product gets a higher market share. So those things are happening. The other point, this is more for EVs, is there is increasingly this concept that there will be a measurement of the embedded carbon in these cars and the batteries, and then there will be a carbon tax that gets applied to it. It's not a definite, but that's a lot of what people are talking about. So if that's the case, then whether it's copper, aluminum, nickel, whatever, you will want to put some, if you can put recycled metal, you'll put recycled metal because you just don't have that carbon cost. So right. I agree with what you're saying. I think a lot of that has to be, sort of shake out, and then governments will have to play a role in subsidizing the adoption of some of these things. But there's enough tailwinds to do it on its own. It is self-sustaining, economically profitable business with good credentials. But then these other factors will probably drive more of it.
Okay, so just in terms, so one more thing you can on them. Do you want to come back to Peter and John? With regards to, there's no such thing as an entire closed loop system when it comes to recycling. So you showed us some of the numbers there, in terms of the capture there. But what are the initiatives going forward which will allow you to kind of capture more of the copper through recycling and become more efficient and therefore be sustainable in making money?
Yeah. So from specifically our perspective, we are trying to close as many loops as possible, as efficiently as possible. So the two big ones I can mention that involve copper. One is the e-waste sector. So increasingly, we are trying to find ways to have more loops that we can close, either through platforms or through working with OEMs. So for example, we recycle all the manufacturing waste for one of the world's largest electronics semiconductor OEMs, right? So we are increasingly looking at more of such models, which helps everyone's objectives, or the circular electronics partnership. It's designed to increase transparency awareness so that less of it leaks to the informal sector. We bring it back. So that's one model, and we are investing a lot of time, energy, money in these businesses. The other one is we're also working on various platforms for battery recycling, which is currently lot talked about is on the nickel and cobalt, but actually batteries have a lot of copper and aluminum too, right? So that's a multi-metallic sort of strategy, but that creating those platforms like the deal we announced with Li-Cycle last week, over time will allow us to create these closed loop models where we will capture a lot of these metals, including copper. So those are some ways we are addressing it.
Okay, and John, what do you? And we've seen the price of copper rise significantly over the last 18 months. And as an investor, I want to understand whether I get the supply-demand stories, which every kind of everyone associated with copper will pump out there. But I want to be safe in my investing. So, do you think the current pricing curve is sustainable? Do you think it's based on fundamentals, or is there something else driving that? What's the future look like?
Well, I think it depends how you want to view the market, I think, firstly, Matthew, because everyone has their own opinion on the market. I mean, the price has significantly increased over the last 18 months, as you say, but in the last month, it's come down significantly. So I think copper was roughly up over close to 11,000, and now I think yesterday it closed at around 9,200. So you can see that the variable market goes up and down quite significantly. And I think, is that an outcome or a subsupply of someone trying to punt the market? I think the answer is yes. There are people in the market who have bigger stockpiles than others and can try to manipulate the market in certain ways. And I think those things aren't going to change. But I think the long-term guide is that, depending who you listen to, is that copper is going to end up around 11,000 over the next, I'd say, 24 months.
Right. And is that good for developers? Is that enough? Get developers on board. We saw some charts earlier in the first session, which suggest that the diversity of supply, may be the savior for the industry, but there are going to be jurisdictions which are struggling at the moment. The new production coming on needs to be financed, and bankers like me would be needing to see sustained pricing to feel comfortable around that. So are we there yet?
I think generally, yes. I don't think the price is going to go down. And I think if you ask miners generally, they'd be very happy to sell at a market price of 10,500 over the next 5 years. I think that sustainably gives enough validation, let's say, profit for the project for it to go ahead. Do I think it's going to drop below that and have issues in price? No, I don't think so. I don't think for investors it's something to worry about within the short term.
Right. Okay, and
I think there's enough demand and increasing demand that I think there's going to be an upwards trend.
Bankers should relax. It's going to be okay.
Well, okay. Coming from finance, I don't think you can tell a banker to ever relax from a background. And many of them will always find the devil's advocate and play that. But I think in the long term, I think if you read enough statistics, I think there is enough backing that prices will not fall off the table and therefore put projects under pressure. Right.
Peter, in all of this, fabricators, smelters, margins are being cut. Is that going to be the long pole in the tent, as it were? Is that going to be the problem coming down the line?
Well, that's I'm at the mining end, so that's the miners are just going to have to. Yes, grades are going down in the porphyry and the large open pit porphyry deposits, but there's still high grade deposits. If you're looking for high grade deposits, well, basically you've got to be in the Lithilian Arc and the African Copper Belt. That's the one place where you do have very high grade deposits. There will not be a revolution in extracting the copper. I mean, as the guy said, we're getting 90% of it out now. You're constrained by physical constraints. The laws of chemistry and physics are going to keep you there. I would like to see more of an emphasis on the quality of the copper concentrate, because at the present moment, the miners are being encouraged for quantity, not quality. And I said I cannot see that being sustainable over if we're going to be doubling the amount of copper in the next 25 years, because that's going to ram us up against a serious pollution issue, which has got to get resolved. And that's going to basically increase the cost to miners. Mining will not be as profitable because they're going to have to share some of the burden which the smelters have taken. Because as I said, the miners have appropriated 75% of the value that used to go to the smelters. To resolve the pollution issue, that's going to have to go back the other way.
Isn't it the smelters' fault? You know, they don't seem to be in a position of strength to argue their case.
Well, that's because of the enormous expansion of the Chinese smelting industry, and that we've been basically in a concentrate deficit situation. But surprisingly, the Chinese smelters don't seem to be as under control as much as the Japanese are. Because, for example, there is no specific limit on arsenic level for copper concentrates in Japan, but I can assure you that they were all probably summoned into MITI, and they were given administrative guidance to say, you know, you will not import anything over 0.2% copper, and that could happen in China tomorrow.
So, given what the European governments are saying, given what the North American governments are saying about trying to control their own supply chains, critical minerals, etc., can you see smelters being built ex-China, given the scenario you've just outlined?
Well, I think an excellent point was made by one of the previous speakers. Is, you know, try and permit a smelter in Europe or in any other Western place. Maybe the smelters or metal production might move back more towards the mines, where they can also deal with the pollution problem.
So this is not in my backyard. Is that the problem?
Oh yes, well everybody wants the metal, but no one wants the consequences, don't they? I mean, I think there's a large proportion of the populace that actually believes that electric vehicles are made on the internet. There's actually nothing physical put in them. They just magically appear.
Right. Okay. Okay, but what about your outlook? We've heard John say that, you know, that outlook is good at 10.5, 11,000. What's your thoughts on where this market's going? Is this current pace sustainable, or are we going to see a reset? What's it look like for you?
Me,
Peter, yeah, please.
Well, I think what we're also going to be finding is the grades are going to be dropping. We're also seeing capital costs increase. And, for example, price of fabricated steel in Australia in one place has gone from $1,200 a tonne to $2,300 a tonne. We've got a whole lot of inflation working its way through the system. And if you go and look at the capital cost of building a mine, and if you're 4,000 metres up in the Altiplano in Chile and you've got to desalinate seawater and pump it up there, for example, Minera La Escondida spent $3.5 billion on a seawater desalinating plant and to pump the water up there. So it's the cost. It's not the cost of the mining equipment. It's not the cost of the concentrator. Increasingly, it's the cost of the infrastructure, which is power, water, and tailings disposal. And those costs have been escalating at, I would say, an alarming rate. So the price of copper, I mean, I don't know about people are going to be making a huge amount of money at $11,500 a tonne. Perhaps if you're in existing mining, it will. But you guys in the business, you have to offset that against the capital and operating costs.
Okay.
Maybe.
Let me leave Kunal with the kind of last words. Obviously, Glencore's very invested in this across the board. It's looking at new revenue streams as well. Your thoughts for copper going forward, Kunal?
I think it's hard to put a number on it, but clearly, just to echo John and Peter's comments, if you believe, you sort of walk backwards, right? So if you believe that you are going to get close to, or you get to net zero, then it is electrification, it is renewables, it is the grid storage. which means you need copper. We can argue whether it's 2 times copper or 1.5 or 3. You need more copper than any model is predicting can be produced. And that means you need a support price that justifies additional output, whether from existing assets or new assets. Newer assets, again, some of the points made. It's getting difficult to permit new mines on the western side. There's some good examples in the US that are running into difficulty. Smelting is so something has to be figured out in terms of how you get either new technology or deploying old technology at scale, which will all have increased costs. So there will probably be short-term volatility on pricing based on demand projections or events. But if you look at the 25-year sort of horizon, you definitely need a support price that justifies these. Because think about it, I mean, a mining investment, it takes, 15 years plus before you will get copper. So those decisions have to be made to get there. Again, recycling, a lot of people also say, like, Peter was saying, EVs are not made on the internet. Similarly, some people, I've heard business models saying we can recycle our way out of any supply demand gap. And although I manage our recycling business, I don't believe in any of these metals, recycling can close the gap. So yes, recycling gets you metal faster, maybe you have lower OPEX or CAPEX, but can't close the gap. So you still need support prices that will help primary production. Recycling can help with that, but hard to put a number, but there is a short-term view which people would play, but the longer-term view, you need that pricing support.
Good point. I think we see the same thing in nickel over 2-3 years with on the scrap side. So, Kinar Singer from Glencore, Peter Monroe from Mineralis, and John Passenden from Ocean Partners. Thank you very much today for kind of filling the gap. We've reached the sort of end of the day. We're going to have Gerardo Alvier from Rio Tinto and the University of Queensland just kind of wrap it up with his final thoughts now. Gentlemen, thank you so much.
Thank you.
Thank you.
Thank you, everyone. Very interesting first day that we have been listening to the different aspects of copper, touching bases mainly on the supply-demand aspects and the future that is expected for copper. Certainly, we don't have an agreement in terms of increase of the demand that we have to meet in the coming years, whether recycling can share some of the load, and also aspects like arsenic that could jeopardize the decarbonization of the economy using copper. Tomorrow we will be going more specific into the processing side, looking into understanding geology and exploration of copper, understanding what are the current sources of copper, how much is split between the smaller and larger companies, how the future looks like. We will try to understand locations or types, discoveries and mining, and then we will move into processing to understand what are the methods to bring copper units to the final user. So I invite all of you tomorrow to join us for the second day on the Copper Value Chain series. And I want to thank to the people and the speaker that we have today, especially to share their views on the supply demand outlook, and also on the aspect like recycling, that whether it could be a solution to meet the copper demand. Saying that, I just invite you to join us tomorrow once, as I said, to continue learning about copper processing. Thank you very much.